Welcome, sir, on this platform among all the members on the Sunday. And I can say that this topic has a real interest from the members' side. And first of all, I request Abhinav ji, Shuchi ji, if they have joined, please enable your video. And Kanta ji, I request also.
Shashank, somehow I cannot enable my video.
Just wait, ma'am. Gaurav ji, please make Shuchi the co-host. Yes, ma'am. Shuchi, please now you can enable your video on. Yes.
I think Mr. Abhinav is also not able to join.
Just wait. गौरव जी
Like
अभिनव जी
video.
को और प्लीज बना दीजिए आप को होस्ट. Perfect. And please see, I see the Sumit Garg ji is also in the list. So if he is available, make him the co-host also. And Kanta ji also. Welcome Abhinav ji.
Hello, Shank. Thank you.
Welcome sir. Welcome. Hello Sumit sir. Very good afternoon.
Afternoon, good afternoon. I was trying, but
Yeah, I think I just read your message. So after that, I feel. And Kanta ji, are you able to unmute yourself, or are you able to on your video?
good afternoon, Punit भैया.
Good afternoon, Sumit bhai. How are you?
Fine, बहुत बढ़िया. सुची जी नमस्कार, अभिनव जी नमस्कार.
जी नमस्ते.
Very interesting topic today you kept, sir.
This is actually a very good field for professionals.
Start this section with our honorable speakers of the day. Please, Sumit ji.
Okay. A very good afternoon to each one of you. And first of all, welcome our guest speaker of the day, CA Advocate CA Punit Agarwal ji. Welcome to you, sir.
Thank you, Sumit ji.
CA Suchi Agarwal ji. Welcome to you. And CA Abhinav Mittal ji. And moderator of the today's session,
Thank you.
CA Kanta Sharma ji. Welcome to you, Kanta ma'am. And of course, the man behind the team NIRC, the chairman of the NIRC, young and dynamic CA Shashank Agarwal ji. Welcome to you. And before we start of the session, and today's topic is hybrid annuity model, ham booster shoot for Indian roads infra, and new area of professional opportunities for chartered accountant. So definitely we are trying to put select the new topics so that we can learn different things and get the opportunities if they are available. So before starting of the technical session, I request Chairman and RC Shashank ji to say welcome address.
Yeah, thank you, Sumit ji, and thank you for welcoming all the guest speakers on this platform. And first of all, the honorable speaker of the day, Advocate CA Punit Agarwal ji. I can say my sister CA Shachi Agarwal, Abhinav Mittal ji, and to my dear member from the region, Sumit Garg ji, and the moderator of the day, and none other than Kanta ji, who is, you can say, the member of the profession and the revolutionary of the profession, who will definitely help to make this session more interactive and more moderated in a way that yes, members will definitely learn something new out of this new opportunity for the members. And as the Punitji already telling to us, and even before some days before, we had a session in the Jammu and Kashmir sub-regional conference on this topic. But on that day, we are not able to do the justice with the topic because we had a very less deliberation on the topic. And I really believe that infrastructure is one of the key pillar of the growth of any nation. And if we are able to contribute in some manner, either in related to consultancy, either in related to the tax planning, or either in related to the building of some kind of nation's infrastructure, so I think that can be the best contribution from the professional. Because हमारी फील्ड में जो चार्टर्ड अकाउंटेंट्स हैं, उनमें से कुछ रियल एस्टेट में चले गए, ये हम भली भांति जानते हैं, एंड दे आर डूइंग वंडर्स. एंड कहीं ना कहीं एक अपॉर्चुनिटी के रूप में मैंने इसको देखा, इस हैम मॉडल को. और पुनीत जी से जब भी इसके बारे में चर्चा करी, तो ही इज एक्चुअली डिटेलिंग आउट कि इसमें एक टीम वर्क का बड़ा साथ रहेगा. एक कंसल्टेंसी, एक बोलना आसान है, करना मुश्किल होता है कहीं ना कहीं. बट आज हमारे पास जो ये पूरी 3 लोगों की टीम है, तो all 3 have different experiences. So ये चीज मैं आपके बीच में शेयर करूंगा. कांता जी, आपके पास प्रोफाइल है? Otherwise I will introduce 3 of them. If you are not having a, can you unmute yourself?
Yes, I have the profile, but if you want, you can start with, no issues. I will just introduce second speaker. First, start with, you can start being the chairman. You have the
No, ma'am. That is okay. I only request if the formal profile read can be done, that would be more comfortable and fruitful for all the attendees. So I will only welcome my all the dear participants, all the attendees, all the members of the profession, and some non-members have also joined. So you are also welcome in this event. Have a fruitful discussion with all the panelists of the day, and let's enjoy this session. And I request Kantaji, please introduce our speakers and hand over the mic to the speakers after that. Over to Kanta ma'am. Thank you.
Kanta ma'am, kindly unmute yourself. Yes.
Yeah. Thank you, Shashankji and Chairman NIRC and CA Sumit Gargji for organizing, and welcome Mr. Ajay Singhal sir, Secretary NIRC, for joining us in this session. And this is, I would say, I found it little different from rest of the programs organized by the various forums of the institute. But this is I would say this is a program which is towards the how to generate an opportunity for the CA. Knowledge sharing is enough. Enough knowledge sharing is done by the various platform of the program, but what is required, we have enough knowledge. Now what is required is where to use our knowledge. That is more important for nowadays, because in this lockdown period, this COVID session, everybody is full of knowledge. Now so many seminars happen, we learn so many new things, but now is a time how to exploit that knowledge. So this is a wonderful session. I would say that how we are looking for the professional opportunity in the new area, where the government is coming up with HAM, which is the hybrid annuity model, which is again PPP model, a refined version of PPP model, where we can look, government is also participating and with the private people. So I think in my mind, what I can think that there may come a lot of opportunities in this area and we can explore in it. Our guest speakers are here, who are more elaborate as on these opportunities and how we are going to function. We'll keep discussing in between all this. And first, let me introduce Punit ji is the first guest speaker, I think, of the session. I have to start with Punit. Shashank?
Yes, ma'am. Please, ma'am.
Yeah. So Punit ji is the advocate by profession, and Punit has more than 15 years of experience in providing legal services and has also represented highly contested corporate and insolvency bankruptcy matters for the multiple industry segment. He is engaged in providing legal and tax consultancy to big corporates, including public sector undertakings, state-owned enterprises, and also Fortune 500 companies. That is wonderful. He acts as the faculty of ICAI and members of the Supreme Court Bar Association, Delhi, and High Court Bar Association, Sales Tax Bar Association, and the IT Bar Association also. So he is the multifaceted speaker, I would say. So let's not waste time, and I welcome Shri Punitji to start his deliberation, please.
Thank you.
Sorry, Punitji. I will also request Kanta ma'am, please also introduce Shuchi ji and Abhinav ji.
Okay.
And after that, Punit ji will chalk out the complete program outline, and
Okay.
after that, Punit ji will take it forward. And Ajay ji भी जुड़ चुके हैं, तो अजय जी से भी रिक्वेस्ट करूंगा सर, आप 2 मिनट जरूर दें.
शशांक जी, मैं जहाँ पर बैठा हूँ डिस्टर्बेंस बहुत ज्यादा है, तो मैं ये चाहूंगा कि हाँ, but I will say thanks to Punit ji, the entire team, for like request, like
accepting our request to become.
I will only say you might be hearing a voice in the back, so please, Punit ji and Daddy, please continue.
Thank you, Ajay ji. Okay, ma'am. Over to Kanta ma'am, please.
So our second speaker will be Ma'am Suchi Agrawal. She is a chartered accountant by profession. So Suchi has more than 9 years of experience in advisory, business consulting, and providing solution to complex transactions across multiple infrastructure sector, with a strong focus on urban infrastructure and real estate development. That's wonderful, ma'am. In the past, Shuchi has worked with EY, Lakshmi Kumaran and Sridharan, and which are the leading advisory firms of India. Shuchi has also worked primarily with the global multinational companies in India, which focus on the construction, healthcare, and real estate, etc. And our third speaker is Mr. Abhinav Mittal, CFA. Mittal sir is the chartered holder with the CFA of USA. Abhinav has more than 10 years of experience in infrastructure, public-private partnership, and financial advisory across varied infrastructure sectors. His geographic experience span across Southeast Asia, Central Asia, and Middle East. Abhinav worked with the PwC for 10 years and is currently direct, managing director of Yoga Infra, which is the infrastructure advisory firm with the offices in India and Singapore. All three speakers are from the real estate sector and having a lot of experience in this infra and projects. So let us gain our knowledge from them. What is their experience and how can we get benefit out of their experience and working out. So let's start session with CA Punit Agarwal. Punit Agarwal ji, please start the deliberation.
Thank you, Kantaji. Shashank Agarwalji, the young and visionary chairman of NIRC, who has given new dimensions to NIRC in this period, along with very dynamic Ajayji and the whole team, Secretary NIRC, my very dear friend, younger brother Sumit Bhai, Kanta ma'am, moderator for the day, seniors in my profession, colleagues and younger friends in the profession, brothers and sisters in the industry and media. A very warm namaskar to all of you. As Kantaji has mentioned that education is one part and it will always remain with the professionals. And that is what profession is all about. But it's very important for us, all of us, to also search and find new and better opportunities in the profession. So I think today, a lot of focus would be on key issues that are arising under this concept of hybrid annuity model. And friends, hybrid annuity model is a model where the government is investing and has created this model which is allowing government to increase its bandwidth. So if it was initially required to construct or was able to construct, let us say only 100, now with the help of annuity model, this hybrid annuity model, they can go up to 250. So with the same budget, they are able to expand their reach. So it is leading to increase in the infrastructure expenditure. And when there is increase in infrastructure expenditure, direct and indirect opportunities always knock the door, and professionals cannot remain out of that. So today we shall be discussing HAM from 360-degree perspective. We shall be discussing the financial implications. We shall be discussing the tax implications. We shall be discussing the accounting implications. And last but not the least, we shall be highlighting all the key areas where professionals can contribute. So it's going to be very interesting to be along with all of you. And friends, let me tell you that no HAM is lesser than 1,000 crore rupees. So if 1,000 crore, if in a project of 1,000 crores you are associated in any way, be it funding of the project, be it financial closures, be it financial modeling, be it the most technical and I would say complicated taxing provisions, and lastly but not the least, I would not have thought why they have created so difficult financial reporting standards, which we call as Ind AS. Ultimately, I was able to conclude only one thing, that these reporting standards are best suited for the professionals, because only when there are complications, the work of professionals would be there. Apart from that, I think the things could have been kept very simple. They have been complicated too much, but there are also a lot of professional opportunities there. So how we are going to follow these sessions would be that Abhinavji would be starting it with setting the context. What is HAM? What are the financial aspects of HAM, etc. Financial modeling opportunities. What issues are there for the promoters, for the financial managers? Then I would be taking the tax part, both the direct and the indirect part. Again, highlighting all the opportunities, and then at the end, of course, it would be last but not the least, again, very important, very complicated issues relating to accounting. Ms. Shuchi Agarwal would be handling those. And at the end of it, we will summarize that what are the different professional opportunities, and also take up questions and answers, time permitting. So we will try and have at least 15 minutes for question and answer. This is how we have modeled it. So Kantaji, I would request you to kindly invite Abhinavji for starting the first session.
कांता जी अनम्यूट कर लीजिए प्लीज.
Thank you, Punitji, for letting us know the design of the program and the way it will flow. So let's start with Abhinav Mittalji. So please start your session and start your part which is being assigned to you, and so that we can be learning more from your side.
Okay. Thank you. Thank you, everyone. Thank you, Punit ji, Kanta ji, Shashank ji, for having me as a speaker on this event. And welcome to all the attendees who have joined this session today. So as Punit ji mentioned, I would be covering the financial modeling and project finance aspects of hybrid annuity model. Just want to confirm, I hope you're able to see the screen, right, Kanta ji? Is the screen visible?
Yes, we are able to see that.
Okay, great. So I will start with the basics of what is HAM, going towards financial modeling nitty-gritties, and then going towards the project financing, and lastly covering the secondary market transactions. Because this particular model has a lot of interest from international investors as well as local developers who are now investing in this project. And there's a great opportunity for all the professionals to work in that area as well. Just to begin, so here you see that how HAM is a very good opportunity for all the professionals. So you have these few snippets from the news articles that have been published in the last few months. You must all be aware that infrastructure is a key pillar in the latest union budget announced by the government of India. And road transport is perhaps one of the most important therein. So HAM is a model which is being used by government agencies, primarily NHAI, as well as the state government agencies, to tender national and state highway projects. And as you can see that, if you see that 30,000 crores is expected to be invested in the coming financial year only in HAM and BOT projects. Similarly, in this quarter, in the current quarter, which is on Q4 FY21, NHAI would award projects worth 72,000 crores, and more than 50% of that is going to go through HAM. So as was mentioned earlier, that typical size of the project is around 1,000 crores. So coming of opportunities in this section across various categories is huge, and there's a lot more potential for people to get involved in these projects. Also, there was a recent change in this HAM project due to which a lot more players are now entering into this sector compared to the earlier part. So this slide gives you a little bit background on what exactly is HAM. So when road project highways are built in the country, there are typically three models which are followed. The first one is EPC model, typically wherein the government would just tender the construction upfront to the private sector. So they would say that, okay, I'm giving you 100 crores or 500 crores, you just come, build the road for me and go away. So that was the traditional EPC model that was there for the road sector. That was way back in 90s, or it's still being used, but in a very limited way. Then there is BOT model. BOT model, as you must have seen that when you go through some of these highways, you have to pay toll to them. There are toll booths on which you have to pay toll to the private sector. So these are projects in which the private sector would come in and build the project, but then the revenue of the project is taken throughout the operation period. The private sector would not get any money upfront, but once the project is commissioned and once the traffic is moving on those highways, then the toll is collected by the private sector or the government, and the money starts to come in to the private sector. So we saw that EPC is something that money is coming upfront to the developer. BOT is something where the money is coming during the operation period. Now HAM is a hybrid of two models. That's why the name is hybrid annuity model. Because in this hybrid model, suppose the project cost is 1,000 crores. Sorry, 40% of the amount, which is around 400 crores, would be paid by the government upfront during the construction period. So the construction would have different milestones. If the construction period is, for example, 2 years, there would be different milestones over the 2 years, and private sector would be paid over these construction milestones. There are over 10 construction milestones in that sense. And the remaining 600 crores would be paid during the operation period. Now, because you are actually deferring the 600 crore payment over the years, government can take a lot more projects compared to the EPC route. Because earlier they would have to pay 1,000 crores upfront to the EPC guy, but now they can actually just pay 400 crores and use the remaining 600 crores for other projects. So the capability of the project, capability of the government increases to implement more projects. And we will also talk about other advantages for this model. So this is kind of basic. What is hybrid annuity model? So why is it called so? Moving on, and what are the key advantages? Now, if you see from a private sector perspective, so on the slide, you can see that there's one section about private sector and the other one is about the government authority. From the private sector perspective, the key advantage is the money that he has to put upfront. So in any PPP model, you have to raise debt to construct the project. Sorry. Now assume that you have to, the project cost is 1,000 crores and you have to raise a debt of 750 crores, which is 75-25 DE ratio, debt equity ratio. So the private sector would have to invest 25% of amount upfront as equity. In this case, since 400 crores is being already paid by the government, you have to apply debt equity ratio only on the remaining 600 crores or the 60% of the project cost. So effectively, 25% of 60%, the equity contribution is limited to 15% only. So that's the main advantage, that the upfront amount of money that is being required for the project implementation is reduced. And so you see a lot of new players who are entering into this market. So to give you an example, in the last 5 years since this model was started, there are more than 40 players who have now entered into implementation of HAM projects. And these are 40 new players who have never done developments before. And these players do need help. They need help across the entire value chain. They need help in financial modeling, during bid advisory. They need help for debt raising. They need help to understand tax. They need to help to understand accounting. So there's a huge potential there. Another advantage for this project is that the land availability. So there's minimal land risk in these projects because the government provides 80% of the land before the agreement is signed, and the remaining 20% is to be provided within 90 days of signing of agreement. So that actually makes this project very, very bankable. Lenders are willing to finance it because the land risk is totally out of the project. And this is very common in power projects in the past in India, like transmission projects and big thermal power plants. And now bringing that into the road transport projects also has generated a lot of interest from these private sector participants. So we have talked about the private sector. Now, what is the advantage from the government sector side? So we have already talked about the first point, wherein we said that, yes, the government doesn't have to pay 60% upfront. They can actually defer it. And this is an off balance sheet kind of payment because they don't have to actually borrow it upfront. So they are able to implement more projects. So as I said, that there's a wider participation of many EPC players. Now, if there are a lot more people coming in, you can see that there's higher competition. The government gets more value for money, meaning the projects are being built cheaper, and for the same 1 rupee that the government is spending, you're actually getting more kilometers of the road. So that's the advantage. With increased competition, higher value for money for the government. There's timely project completion because the way that the model is designed, and we will talk about the milestone payments in a while during the construction and the operation period. There are defined milestones during the construction. So because of these milestones, the private sector has the incentive to complete the project on time. So that's another advantage. Okay, so So now let's talk about some numbers here. So we are always saying that this is a huge opportunity. Why is that? And this table actually summarizes the projects awarded in the last 3 financial years. So you can see that if you see this table, you would see that, okay, there are 167 projects awarded to EPC and only 80 projects awarded to HAM. So the question comes in mind whether EPC is actually more preferred or not. To answer that question, let's go to the next slide. Here, what we have done is we have actually compared BOT, EPC, HAM in across 3 parameters: total project cost, total length of the project, and number of projects. Now, if you see HAM and EPC, which is the red and green color bar, you would see the number of projects may be higher compared to HAM. But the total project cost is higher in EPC, is higher in HAM compared to EPC. So essentially what it means is that for important projects and for high value projects, government is using HAM model rather than EPC model. And this is for last 3 years. But as I said earlier, going forward, HAM is going to dominate. Like more than 60% of the projects coming in the next financial year would be through HAM. Okay. Now this pie chart shows another interesting statistic. Just as a caveat, I want to mention that the data that is presented here is as of June 20. So we don't have the latest data, but this will still give an idea that a 64% of the project, like around 65% project are under construction at that point in time. So all these projects will be completed in 2021. And once these projects are completed, and once they move into operations, either 2 things would happen. One is either the developers would operate themselves, and in that case, they would need a lot of support in things like GST compliance, tax compliance, income tax compliance, your auditors, your auditing of the company accounts, because all these projects are implemented through an SPV structure. And we will talk about that in a little while. And the other thing is that players would want to move out of this project, meaning that some of these players may be very, very comfortable in building the model, building the project. So they would want to just build the project, take it into commissioning, and then exit out of it. And exit happening, meaning that they would either sell the project to a local player or international player. And again, in the case of the sellout, there would be opportunities in due diligence for the professionals to enter into this project. So let me move a little bit to the next part of the discussion, which is more about financial modeling and what are the key things to keep in mind. So from a modeling perspective, the key objective for the modeling of these projects is to determine bid parameters. Bid parameters meaning parameters are used to win these projects by the private sector, and these are primarily bid project cost and first year O&M cost. So the bid project cost is the project. So in all the RFPs, there is a estimate of that is published by the NHAI for these projects, and then the government has to the private sector, while bidding, has to actually revise this estimate as to its own parameters, that what would be the cost as per him, and then they bid that project. And the other bidding parameter is the first year O&M cost, meaning that what would be the cost for maintenance of these projects for the first year. So these are the 2 parameters that need to be determined through an extensive financial modeling exercise at the time of the bid. And we will talk about that in a little bit while. So as I mentioned earlier, that why this is a more effective way to do projects, and this the table that you see on this slide, that talks about the payment milestone. So the project, the concession agreement for these projects, they have 10 payment milestones defined. And as you can see, for the first payment milestone, meaning that 5% of the project is completed. Second payment milestone, 10% of the project is completed, and so on. So defining these payment milestones and incentivizes the private sector to complete these projects on time and within cost. Now we talked about the operation period. Now, these are the payments that are made by the government to the private sector during the operation period. And there are three kinds of payments. One is the annuity payments. Now, this annuity payments refer to the 60% of the completion cost that was not paid during the construction period and would be paid during the operation period. And this 60% of the cost, the 600 crores that we talked about earlier in our example, is paid over 30 milestones paid every 6 months. So assuming a 15-year life of the project, you have 30 milestones because it's semi-annual every 6 months. And then these are the payment. So if you add all these numbers, 2.1, 2.17, and so on, till 4.75, you would, these would add to total 100%. So that's the payment milestone that would be there. Now, since you are not getting the payment upfront, and instead over a time period, sorry, the government also pays you interest on annuity payments, meaning that essentially, since the government didn't pay this money earlier, and you have to shell it out, if this money you would have invested somewhere else. So to compensate for that, the government also pays interest on annuity at a rate of average of 1 year MCLR for the top 5 banks plus 1.5%. And this is a recent change. The third payment is the O&M cost payments. These primarily refer to the cost of operating and maintaining the asset during the 15-year lifetime period. And this is also inflation adjusted, meaning that in case there is a cost of maintenance is increasing over time due to any reason, maybe the CPI has increased, the world wholesale price index has increased, and the costs are increasing, then you're also compensated. So you can see that throughout this construction operation period, right, the private sector is really, really protected, that the payments are secured, it's linked to inflation, you're getting interest also on annuity, there's an O&M cost payment also, there's lower upfront equity requirement, well-defined payment milestones. Due to all these things, right, this is a really, really bankable model and the lenders are happy to finance it. However, the new players do need some guidance, even on basic financing documentation, etc. And that's where they need help by us. Now, in this section, right, I have basically, as a firm, Yog Infra, we do help in financial modeling for some of these HAM projects. We have done that in the past, and this is kind of a sample of what are the topics that are covered in a typical financial model. So starting with inputs like capital expenditure, funding, debt, equity, working capital, revenue, operating expense, major maintenance, taxation, depreciation, and so on. Then what happens during the construction period, meaning annuity payments during construction, mobilization advance, during the funding, waterfall, equity, debt service reserve account, etc. And then operation period, what happens? So revenue, operating expenses, major maintenance expenses as well. So there's a lot of things that we need to take care while modeling. Similarly, depreciation, accounting depreciation, tax depreciation, how to calculate corporate income tax and GST provisions as well. So the objective of Yog Infra while modeling is to do a model which is both a bidding as an operational model as well. So when we do build models, we cover all the aspects, including taxation and accounting, and you can see that it also includes Ind AS 115 accounting standards as well, built within the model. And then you have the output financial statements. P&L, cash flow, and balance sheet. So this is a typical structure that should be followed while building the model. And these are the color codes, so meaning these are the inputs, primarily inputs. These are all the calculations, the one that you see in blue color, and then these are the outputs from the model. So this is again kind of a snapshot of how the dashboard looks like. I'm sorry, it's a little bit, let me just zoom out, but essentially this shows that this is just kind of a dummy numbers, essentially what is the project summary, what is the bid strategy, what is the financial close amount. So these are the important information that we would actually typically include in a dashboard for the project. So uses of funds, sources of funds, capital structure, equity financing, how it happens, and what are the project returns, etc. Right. And these are the outputs. So as we talked about in the P&L statement, profit and loss statement, the cash flow statement, how it should look like, the balance sheet, and the calculation of returns for the project. So project and equity IRR as well. Okay. So that's about the modeling part of it. Now let's talk about the second half of the presentation, which is more about the project financing for these projects. As I said earlier, these projects are always implemented through an SPV structure, which is called a special purpose vehicle. Meaning that there is a company which is formed especially for every project. And that company is the one which enters into different contracts for this project. So you see here, this is the SPV. There's a developer or the shareholder who would provide the equity financing and who enter the shareholder agreement. These are the lenders who would provide debt financing and would enter the financing agreement. You have the government authority which signs the concession agreement and provides the annuity and the O&M payments. The EPC contractor. Now, in most of the cases, I would say in typically 95% or maybe 99% of the cases, the person who actually owns the SPV, which is the shareholder, is also the EPC and the O&M contractor. Because, as I said, these are new players who are entering the development mode.
For a while, Abhinavji.
Yeah, sure.
While you are explaining the entire model, the way of working, can you in between highlight the things where the CAs can help in the planning and execution and project part of the project, where the involvement of CA is always also involved and required at various stages. If you keep highlighting these aspects also, then it will be more beneficial for the participants.
Okay, sure. We'll do that. So I think from a modeling perspective, right, I just want to kind of, let me go a little bit back and just highlight that in the modeling part, although it is very often misunderstood that modeling is very easy by the developers, and the major impact that they have is on the returns. So if they don't model the taxation correctly, they don't model the accounting statements correctly, the accounting treatments of the project correctly, the debt assumptions correctly, and then there is incorrectly, then there's a lot of impact on the returns. So I think the most opportunities for the professionals in these calculation part that we see, because inputs are typically provided by the client. You can't do a lot of that there, but from a calculation perspective, like how do they calculate the debt financing? What is the treatment of debt that they take? You have these taxation expected, corporate income tax and GST. You have this Ind AS 115 account. So these are the like essential things that the contribution from professionals would definitely be required. And we would recommend that the entire model should be overall supervised, even if it's being done in-house. The first preference is that they should actually get a proper agency to actually build these models for them so that the inputs are correct. But due to some reason, if they want to do it in-house, then definitely there are some of these sections, they need help for professionals, and that's where we can contribute there. And from a financing perspective, the structure that I've actually shown in this diagram, this is a very, very simplified form based on the model concession agreement. One of the typical things that the clients or the private sector would need help with is from a analysis of the contract, or what we call as risk allocation. So whether the private sector is able to take all the risks that have been allocated to them in this concession agreement? Meaning, are they willing to take the O&M risk? If not, then what happens when the project is completed? Are they willing to take the EPC risk? What is the capability of the EPC contracts that they have done? If they are partnering with someone, there's a lot of people who are actually bidding for these projects in joint venture. So at that point itself, how to enter into a consortium agreement, how to actually build that joint venture. Some of these things, people are very new to that. They don't know how to do these things. And they do need help from professionals to actually be able to enter into these arrangements and then bid for these projects. This is one area, the financing agreement, that is, I think, perhaps the most important here. Let me just switch over. Yeah, I think this slide would help. So in for most of these players, especially the new entrants, they have a tendency to take corporate loans, meaning that they would take loans on their balance sheet, which is called the corporate financing. So the lenders would have access to the entire company, and whether this project does well or not, lenders would be paid based on the parent company's assets or the shareholder assets. So they have full recourse on the project, on the shareholder itself. But this financing that we talk about in case of HAM projects or in case of an SPV structure is a non-recourse financing, meaning that the SPV is separate from the parent company. So, and the lenders rely only on the cash flows of that SPV for servicing the debt. So in case something goes wrong with the project, the lenders cannot come to the parent company. Similarly, if something goes really well to the project and the shareholders think that I would extract more dividends out of that project, they can't do that because lenders have the first right to all the cash flows of that SPV or the special purpose vehicle. So I think this contractual arrangement, this concept of SPV, what is that? How is this to be structured? It's a new company, how that non-recourse financing needs to be added, what is cash flow based financing? These are typical questions that we are being asked, that how do we go about it? And I think that's one area that there's a lot of gap in the market to have a basic understanding of what is a non-recourse or what is a project finance, and people need help with that. The second part of this financing is, as I said, that once the project is completed, we see a lot of secondary market transactions. Means that a lot of these developers, once they've constructed the project, they want to exit the project because they have been traditionally EPC players. They are the ones who actually, they used to get all their money up front, build the project for NHA, and then go out of the project. Now they have entered development mode because of the lower equity requirements. Due to various other reasons, they haven't entered into this developer mode. Once they've entered into this, they would want that once my project is completed, because I'm strong in construction, I want to exit the project. I don't want to stay in the project anymore. And I would actually want to invest in some other project which is due to be constructed, because my core capability is construction. My core capability is not O&M. And there's a lot of players like that. More than 70% of the players are looking to exit the projects. And in the earlier slide, we talked about that 65% of the projects were under construction in the last year, and most of these projects would be commissioned this year. Now, see, that's something, that's looking in advance, that you would see a lot of these players who want to exit these projects, and they don't know how to do that. So how to approach investors, how to approach pension funds, how to approach these funds for soliciting their investment and exiting of the project. And this is something that there's a huge opportunity for the profession. So, and this has been actually earlier, the private players were required to hold minimum 20%, 26% of the paid up equity during construction period, and 2 years, up till 2 years, they were required to hold that. So for example, if the commissioning date, COD means commercial operation date, was, let's assume, Jan 24, and the total equity investment was 120 crores, the private sector would need to maintain an equity investment of around 31 crores till Jan 36. 31.2 is 26% of 120 crores. So they would have to hold a minimum of 26% till 2 years after construction. Now that period of 2 years has been reduced to 6 months. And this was a recent provision in November 20 update. So the November 20 government said that we are reducing this 2 years to 6 months, meaning this guy has to hold this 31 crores only for 6 months, maybe after another, for only for 6 months after COD, till July in this case, in this example, and then they can actually sell the entire stake. So as you can see that people have now, the private sector has a lot more opportunity to actually recycle capital, due to which there would be a lot of demand for advisors on taking these projects to the market, and even simple things like doing cash flows for them, making an information memorandum for them. And this is where there are a lot of small players who can't really go to very big firms for help, and they would want to go to professionals like us to be able to help them to take these projects to the investors. So that's a huge area of opportunity going forward. And I have listed down some of the projects that have happened in recent past. So you see that the project that the vendors who have actually sold these projects, they are from small to big players. So like for example, Sadbhav is not a very big player, but now they're growing big. So Navyug, Reliance, and these are big names as well. So there are all kinds of players who are actually selling these projects and exiting out of the HAM projects after construction. So I think that's a really big opportunity. Yeah, that's it from my side. Any questions, Kantaji? Happy to answer.
There's only one question was there in that that is also deleted by the participant. So not much of the questions were there in the meeting.
Okay.
So let's move to the second panelist. Maybe since it was announced that 15 minutes will be for the question answer session, maybe participants are waiting for that to complete the session and get to know more about the project. Then they will come up with the questions.
Sure. Punitji, over to you then for the next session.
Please, next session, Ms. Shuchi ma'am is taking care.
I will take it, madam.
So, Punitji, please start with the session.
Yes. Thank you, Kantaji. Thank you once again. And thank you to all the participants once again. So now we shall discuss the tax implications of HAM. You have already discussed that what is HAM. Only from perspective of recapitulating, for the simple purpose that a typical and a single HAM has different cash inflows for the person who executes it. We have already discussed that. Now, the first one is the milestone that the contractor receives during construction. And as has already been discussed, it's only a percentage of the total bid project cost. So assuming that it's 1,000 crore contract, 400 comes to the HAM implementing contractor during the construction. Then balance comes in 15 years, 30 half-yearly annuities. And the third cash flow is with those annuities also comes interest. And there is a specified formula with which the interest is paid. And each year, O&M payments, operation and maintenance payments are also made. So for the next 15 years, because that is also a part of. So it's a long-term contract involving multiple obligations and multiple cash inflows. And we all know whenever there is a long-term contract, whenever there is a contract which involves more than one cash flow on account of more than one reasons, every additional factor adds to the complication in the tax. And this HAM project is no exception. We have seen that some of the most complicated taxing issues have always revolved around transactions which we typically know as the works contracts. And this is again an extremely long-term works contract. So from that perspective, if we discuss it, let us discuss the tax implications in respect of each of these from direct tax and indirect tax perspective. So let me just share first of all the presentation relating to the indirect tax perspective. Hope you can all see your screen.
Just a minute, Punitji, can I interrupt for a while? Participants are asking for want to have more discussion on financial modeling, which is I think we are going to cover in this segment.
No,
And
I will not cover this. What we can do is at the end, we will accumulate all these questions and we will try to answer. And that's why I will try to even so that we can give, if not 15, even 20 minutes, if can be devoted to question answers and such like of discussion.
okay, then fine.
So as I mentioned, this is one of the most complicated contract because it involves long term and it involves several obligations. When this happens, this immediately requires the help of specialized professionals. And as I mentioned earlier, when we talk about professional opportunities, the more the complication, that the professional opportunities, the function of professional opportunity is directly related to the complication. And the second thing is the magnitude and the size. And we have already discussed that each HAM project is at least almost around 1,000 crores and it goes up to 2,000 crores. Therefore, this opens up the possibilities of chartered accountants from both direct and indirect tax perspective. And I would try to highlight many issues which are there to be solved. And when a professional gets engaged with any company, the advice that is sought by the company is not only legal, it is also practical. So you need to know the mental status of the promoters. You need to know the risks involved in each of the position. Depending upon the risk appetite, depending upon the macroeconomic environment, for example, I will point out various places where there are a lot of investigations being done by the Directorate General of GSTI, which is called DGGSTI. So whether in those cases, as a company, would you like to take the authorities head on because you are very confident with your stance, or do you want to be a little more conservative? How can you mitigate the risks? How can you keep the regulators fully aware about what you are doing and what benefits that will have? All these and many more things are there for the professionals to take care. And friends, one more thing which is again very, very important is that this HAM model is not only restricted to roads, it is being extended even to power. And as Abhinavji has already explained that it was there in power, and it is going to be taken to water infrastructure projects also. And the size in those infrastructure projects will be even more. So considering all this, considering that this is what it is definitely going to pose a lot of opportunity. So if I can, I just talked about these 4 different stages of, or 4 different types of payments: milestones of construction, then annuities, O&M payments, and interest which is receivable. Now let us discuss what are the different, and that we will discuss by way of taking a case study. So assume that there is a project awarded by NHAI for construction, having a cost of more than 500 crores. We have taken 500 crores. In the first year, 300 is to be incurred. In the next, 200 is to be incurred. And 20 crore each is the O&M cost each year. And in addition, in 8th and 15th year, additionally 5 crores is estimated to be incurred in respect of major maintenance. So estimated cost and agreed revenue is summarized. So construction is 500, O&M is 15 each year, plus 50 is major, so it is 350. Total cost comes to 850. Revenue that we quoted for the whole contract was 800 for construction and 300 for O&M. It comes to 1100 crores. So what we need to also remember is that in case of HAM, the evaluation of the bid project cost is based upon total. So the authority is not bothered that whether you quoted 800 in construction and 300 in O&M, namely 15 years and 20 crore each year, or you make it 700 and here you change some amount. So this is also a very important part of financial modeling. This is also an important part of the appetite of the promoters, whether they want to have more money to be as part of, number one, the constructions linked payment, or more money to be taken towards the O&M side. So this again involves a lot of financial detailing and the financial availability availability of the resources of the promoter. Now, the consideration we are taking that 40% of the construction, in our case, you know, construction was 800. So 40% of this 800 is paid on achievement of milestones that are linked with physical completion of the project. 10 equal installments of 4% of bid project cost. Upon commercial operation date, the CPL shall be entitled to demand and collect remaining 60%. So as soon as the project asset is completed and commercial operation begins, that 60% becomes due to the contractor, but that 60% of course is to be paid in 30 biannual annuities, and that is to be 180 days from COD. So the day you complete, assuming you complete on 31st March, within 180 days, next 180 days, you become entitled for the first biannual installment along with interest. And NHAI shall also pay O&M operation and maintenance costs during the 15 years of operations of the project. Let us, with this case study, move and see what are the different tax implications. Works contract is defined in section 12119 of the CGST, and it says that it is a contract for building, construction, fabrication, completion, installation, fitting out, and also includes repair, maintenance, renovation, alteration or commissioning of any immovable property wherein transfer of property and goods is involved in execution of works contract. So there are two essential parts of this definition. Number one, it must be a contract which is specified, of the nature specified, namely contract for building, construction, repair, maintenance, etc. of immovable property. Road is immovable, and the contract of HAM is for building and construction of the road along with repair and maintenance. So it satisfies the first requirement. The second one is that the person who does the work should also be involved in transferring materials. Yes, the contractor has to do it on complete basis. He has to transfer all the materials from his site. So HAM contractor falls within this definition under GST, and therefore it falls within the expression works contract. Works contracts are treated to be service under Schedule 2, which is para 6 of the Schedule 2. There it is specifically stated that composite supply of works contract is a service. Now, rate of tax on roads which are meant to be used for general public construction as also for repair maintenance, both falls under 3(4). Therefore, the milestones which is for construction is liable to be taxed at 12%. 6C and 6 is the state portion of GST. So in our case, if we now summarize on the figures, 800 crores was the amount that we bid for construction. 40% of that is 320 crores. And that money comes to us in 10 installments. So 30 crores each. Every 30 crore installment will be attracting a tax at the rate of 12%. This is the GST implication on the installments of 32 crores each. Now let's move further. What is the time of supply of this? Whenever you raise the invoice for that, and when will you be required to raise the invoice? You have to raise that invoice up to the date on which that event is completed. So if they say that upon completion of 20% of the project, you get 4% installment, then immediately on completion of 20%, you have to raise the invoice, and that is the time of supply. You have to pay tax at that time. Let's now move to O&M payment. O&M payment is the balance, is the yearly payment that is going to come to us, which we quoted in our example as 20 crores. So I have shown to you that the same entry 3 Roman 4 of notification 11, that gives rate even for repair and maintenance, which is 12%. So again, that 20 crores would be taxable at this rate of 12%. And time of supply again would be, as we have seen, as and when the payment becomes due, you have to raise the invoice, and that itself becomes the time of supply. Let's come to the annual receipts, the annuity receipts. Now, the major part of that 800 crores, which was our bid project cost, the 60%, 480. That 480 has to come in equal 30 biannual installments, which is around 16 crores every 6 months, and added with that would be interest. This again, there is a very interesting issue around it that again would require a lot of professional judgment, professional support, and how to strategize it. Namely, if you see this entry, I have extracted it in blue. This is called entry number 23, capital A of notification number 12, which is an exemption notification. Services by way of access to road or bridge on payment of annuity. So when do you get access to a road or a bridge on payment of annuity? One would wonder. A person pays toll for the purpose of getting access to a road. No one pays annuity for that purpose. So what they are saying is, when you go into the background of this entry 23A, which was introduced on 20th of June 2017, you would find that a complete agenda was drawn by the GST Council, and they stated that even under service tax, the service portion relating to construction of roads was exempt. Therefore, they also referred to that tolls were exempt. On that basis, they said that the rationale should be that let us not tax the value addition. So we are taxing a portion of it, 40% is anyways taxable. Let us say we do not want to tax the value addition, and therefore let us give exemption to this amount, which is called as annuity payment. But the way in which they worded this entry was, as I mentioned to you, service by way of access to road or bridge on payment of annuity. So now many of the departmental officers are taking an interpretation that the annuity payment which is being made in this case is not a payment for the purpose of access of the road. It is a part of this hybrid annuity model contract where the contractor who is constructing is getting payment in two parts. One is payment of 40% during construction, 60% after construction. But how does it make it access to a road? So for that purpose, one has to go into the background of the exemption. One has to go to why this was introduced by GST Council, and on that authority, because it's very important to understand that constitutionally, the GST Council is the body that decides on granting the exemptions and then accordingly make the recommendation. And that recommendation having been made for exempting specifically these HAM projects, it should be so construed. And the Supreme Court in many cases has stated that the person or the body which is responsible for taking either recommendations or decisions, then their purposes, then the language should be read in light of what has been clarified by them. So yes, a view can definitely be taken. In Rajasthan, one of the advanced ruling appellate authority has taken this view that these are exempt supplies. So, but yes, these issues are cropping. And also I must tell you that even on such like interpretational issues, the investigative authorities of the GST, they are taking contrary positions and are also in a way coercing the assessees to abide by and to follow the position which is being taken by them. Of course, whenever there are revenue authorities, they would be trying to take contrary positions. But we feel that this is not an issue which is to be easily given up. And even in HAM, if I remember correctly, then if tax is to be paid, it is to be paid by NHAI, and even NHAI has clarified this issue that ultimately if tax comes to on all these transactions, we shall be reimbursing the HAM, the tax. So ultimately, it's a matter which the government has to decide. Even the person who has to ultimately bear the burden is the government, and if it is to be collected, then it has to be collected from the contractor but recovered from the government. So it's better that government clarifies these issues beyond doubt, and such like an industry where more than 35,000 rupees, crore rupees is the budgeted amount under HAM for this year. I think it would be a lot better if clarity is given on such like issues. So again, a very important professional opportunity. It's important for professionals to support the companies in such like cases, to make them aware about what are the recent and latest updates from the side of government in such like issues, what should be the interpretation, what are the cost benefit analysis if a person takes the benefit, if a person doesn't take the benefit, what should be the correspondence with NHAI, what should be the correspondence with tax authorities. Should we make them aware about these transactions and the stand we take today itself by way of writing appropriate representations, letters, and intimations, maybe to the jurisdictional officer, to the Central Board of Indirect Taxes and Customs, to the GST Council, etc. We can clarify the stand of the assessee, saying that ultimately we are to recover this from the government, which is NHAI. Government in that context, NHAI is not government, but yes, it is an instrumentality of the government. So we can clarify that if such like issues are any day to arise, then they must be clarified at the earliest so that we can collect and pay. Otherwise, the position that we are understanding and we are given to understand is that it is exempt. So such like all these contracts, and as soon as you start writing to the government on these aspects, those authorities which are the investigative authorities, they are on the back foot. So you will be able to say, you will be able to handhold the client and tell to these investigative agencies that, look, we have taken this position after informing to your authorities. And if your authorities would have given clarification at that time, we could have, if it was adverse to us, we could have collected and paid. If it was in favor, anyways. But you cannot today say that the position that we have taken it unilaterally. And as I mentioned, ultimately nothing is to go out of the pocket of the people who are executing the contracts. So again, this issue therefore assumes a lot of professional opportunity. Yes, madam.
I would say it is more matter of litigation rather than the work for the CA. It is a more since the government must be knowing the what is the confusion area, what is the part, what is the modalities are. They have themselves have not cleared it. So how can it be executed in the real time?
That's what I'm telling you, madam. That's what I'm telling you. I am giving you that direct this thing, that when you are direct, you are continuously in contact with the client, and you know that there is an issue. Then how to mitigate the risk? This is a professional opportunity. And with my experience, I'm telling you that whenever you make representations to the government highlighting the key areas which you as a company are facing, and also informing them of your stand along with your reason, then the investigative authorities, if they knock your door, you have a very strong ground to say that this was not something where you are caught unaware by what I was doing. I have already intimated you in detail what is my stand. I have intimated you my understanding, and I asked you a clarification from the highest authorities. So if they have not reverted back to us, what can we do? And ultimately, this is a cost which is to be borne by NHAI. So professional only has to advise them that please write to NHAI, please write to the government and write letters along with CC to them saying that we have sent it to Finance Ministry, also the Road Ministry. So that all these things are areas where so the profession is not only about implementing something which is very clear. The opportunities will be there where there is less clarity. Then how do we help our clients navigate the way? This is how I understand at this on this point. So the next point is, so annuity payment we have discussed, this exemption. Then taxability of interest, because that interest also comes along with annuity. So there should be no difficulty. Interest should anyways be covered as annuity and not taxed under GST. Otherwise also interest on deposits, loans or advances is not considered to be taxable. And once this money has already become due as per the contract, due in the sense that this becomes a claim and is to be paid as 15 yearly or 30 biannual installments, then this should go under that entry as well. So again, but as I've mentioned, these things can be written saying that these are our views. Then taxability of other payments that are received by So mobilization advance, a very interesting aspect which is arising in the new model concessionaire agreement is where there also the government has already discussed that they will be giving some mobilization advance. So then yes, mobilization advances for services are taxable under GST. They would also be charging interest on that. Interest on advances is not taxable. I have already shown to you. Then issues which comes further is a very interesting concept is coming, and I think this innovation in government is a very, very welcome step even on contracting side. So if a developer is able to complete the work prior to the schedule, then there are rates for bonuses. A question would arise that that extra payment that I get, what would be the taxability? So definitely if under the contract you are getting the money, that also is taxable. Then issues relating to time of supply, etc. All those things would also come in this. The next one is reversal of input tax credit. So reversal of input tax credit is arising because if assuming that 40% of the bid project cost, which is 320 crores in our example, is taxable when you were constructing, and the balance 60%, 480 crores, was not taxable because they were annuity receipts, then can I take full credit for construction? This is an issue that we are deliberating in the Rajasthan High Court, and that matter is again fixed for hearing on Tuesday. So the very interesting issue that is arising is that when you look at the GST Council minutes, they are saying that we are exempting this portion because we don't want the value additions to be taxed. Now, one view which is arising is that if 40% only is taxable, then why don't you disallow the credit up to 60%, which is relating to exempt supplies? The answer to it immediately comes is that in cases of exempt supplies, the credit is denied only when the output is fully exempted. So if the logic is that this transaction is taxable only to the extent of 40%, then I think no credit can be denied, because if part of the tax is exempted, it is not treated to be an exempt supply, and then full credit is available. It's like this: if your output is taxed at 5% and your input is taxed at 18%, then it is not stated that 5/18 credit only will be allowed and 13/18 has to be disallowed. So on these very interesting aspects, this issue is taking a turn, and the advanced ruling authorities, of course, has taken a contrary stand. They say whatever is the amount that is required to be taken can only be in the proportion of the credit, in the proportion of the output that is taxable. But there is one another very interesting aspect of this matter, which is that if credit was taken during the period when construction is continuing, so we discussed that it's a contract typically spanning to 2 years when the contract is to be construction is to be completed. When we took credit in those years, there was no exempt supply, because exempt supply comes when annuity is coming. Annuity is coming 180 days after the date of COD, assuming that that annuity goes to year 3. Then year 1 and year 2, when construction was done, in that year there was no exempt receipt at all. Even if you look at the formula under Rule 42, which talks about reversal, that formula applies only to that particular year. It says you take credit, multiply it by exempt, divide by total. So if in the year 1 there was no exempt at all, because exempt was to come only in the 3rd year, then that would also give an indication that there can be no reversal. So these interesting, I would say, conceptual and calculation issues are arising in this also. But then how we can mitigate that risk of the client, whether we should take and reverse it, what kind of letters should we write to the department, again, whether this credit can be used on any day. If it cannot be used, then why to carry it? If you carry it, whether there would be interest applicable. These are all questions that are still open. So it's for a professional to form a professional judgment which best balances the risk and the reward. So if, let me give you one more example. Abhinavji pointed out in the beginning that in most of the cases, the SPVs which are executing HAM, their EPC contractor is their own holding company. If that be the case, if you directly buy raw materials, raw material means if you directly buy construction materials, cement, for example, the rate of tax is 28%. And the credit that accumulates at your end is very high. But if you buy the cement through EPC contractor, the credit would go first to the EPC contractor. And if at all there would be any accumulation, that accumulation would be at the end of the EPC contractor. So the EPC contractor can use that extra credit in other cases also. But for HAM, because there is only SPV is having no other output, they will never have the scope to use it. So how do we model the contracts in such a way that the tax component, the GST input component can be minimized in the hands of the HAM company, because that anyways will not be, you will not be able to utilize it because your output is taxable only 40% and input, the credit is much more, much larger. So all these contract related aspects are not only relevant from the perspective of the financial modeling, the commercial side, but also from tax side. And there would be avenues to save on this side as well. So the more you have experience on the issues, the more you find more comparables. What are the most beneficial ways of doing the work? What can be different interpretations? How you can apply it? How to, all these are giving a lot of professional opportunities. And dear friends, one more very important aspect which we all need to notice, that now it is, though we call it one nation, one GST, but in reality, it is 29 or 30 states and 30 GSTs. Each state authority is an authority in itself. It is not subjected. So a Gujarat authority is not bound by the view that has been taken in Rajasthan. They are all acting independently and all working in silos. And let me also tell you that even the authorities who are functioning within the same jurisdiction, center is saying one thing, state is saying another thing, center is doing investigation for one period, state is doing investigation for another period. And when one is going to the higher forums, in a case that I recently read, they have also stated that since these are two independent agencies doing investigation relating to slightly different thing, therefore they have permitted them to do it. So there is so much confusion. So it's only a professional who is deep into these issues who can really visualize what the problems are going to come. This is relatively new field, and please note that the maximum number of litigation even under VAT and service tax was in respect of these long-term construction contracts, because they always pose very new and multi-dimensional, multifaceted questions. So it opens up a lot of professional opportunities on all these aspects. Now, another area of professional opportunity is there is a general conception that for works contract inverted duty structure, no refund is allowed. But the fact of the matter is that in respect of what, we must know in respect of what refund is not allowed. If you see the notification that denies refund of inverted duty structure, it talks about the activities that are covered in item 5B of schedule 2. What is item 5B? It is construction of a complex building or a civil structure, including a complex for sale. In the beginning, you would recall that I said that works contracts are covered under entry 6, serial number 6 of schedule 2, which is works contract. So road construction is covered under works contract. One may say that, all right, why is it not covered under construction of complex? I would say complex. It is not a complex. You will say building. I will say it is not a building. Then you will say, but why is it not a civil structure? There are two answers to it. It is not civil structure because civil structure here should be read along with complex and building. And this therefore is a specific entry for such like activities, which are like builders' activities who are constructing it for the purpose of sale. Otherwise, there was no need for having 6, which is an entry relating to works contract. So where there is an entry of works contract and then there is an entry of complex building civil structure, we must read this entry as an entry which is talking about a specific class, and roads should not fall into it. And we have tried and got refunds in such cases. So please, this again is a professional opportunity. Let us not shut our eyes and think that works contract, no, there is no refund. Refund is there It is not there only for construction of complex building or civil structure. So this again is a very interesting professional opportunity which is there. Formula, etc. I'm not getting. We all know these issues and all. So these are the different aspects relating to GST. Now let me also discuss. I will move on straight away to income tax, but I would mention one thing in respect of income tax. Just give me a second. When we talk about professional opportunity, another thing that I would like to highlight is that we all are experts on keeping the books, helping clients how to maintain their books, what would be the principles that would govern. We are in fact, chartered accountants have almost the sole domain in that regard. But when we come to construction contracts, there is a marked difference in accounting for the purpose of books of accounts and in accounting for the purpose of income tax. For the purpose of books of accounts, in all these cases, one has to follow Ind AS because the size of the contract would make the company have to follow Ind AS in almost all cases. Whereas when it comes to income tax, there would be a completely different basis. So now again, a very, very extremely big area of consultants opportunities, especially for chartered accountants alone. What kind of methods, what kind of formulas, and what kind of softwares and systems can be developed whereby a person feeds the information only once, but he is able to derive the output differently for the purpose of accounting, and he is able to derive that output separately for the purpose of income tax, because there is a direct distinction between the method, between the standards which are to be followed for these two purposes. So one way can be that you completely duplicate everything. Other way, which is to be the smarter way, how to save the cost and how to get best information. So first, for that, ICDS cannot be understood by anyone else. The Ind AS cannot be understood by anyone else, especially when it comes to the accounting part of it. So this again raises a very, very important opportunity for the chartered accountants. One more thing which I would like to point out as an opportunity is that from the side of NHAI and from the side of bankers, there are a lot of audits which are being done for the contractors. They want to serve their own purposes. So from the lender side and from the regulator side or the contractee side. So again, there are very good, and when you do it from the other side, then you have a lot more independence. So even from the perspective of professional satisfaction, you have a lot more opportunity when you are going to audit a concern which has not appointed you. So this again is a professional opportunity. Now let me move on to, and let me, I think we don't have that much time, so I would try and wrap it up a little faster. Yes. So we all know that construction contracts are to be, for the purpose of income tax, they have stated that construction contracts shall be following percentage of completion method, and percentage of completion method is to be in accordance with income computation and disclosure standards. And when there was a lot of litigation and assessees won the case that retention money is not to be taxed, they have by section introduced that retention money is to be included in the contract revenue. Then 145, we know this for accounting, and ICDS has been notified in 145. Then Delhi High Court had quashed many of these, but thereafter they have introduced it statutorily. So I'm not going into that debate. So what is a construction contract? So construction contract includes for construction of an asset and for restoration of an asset. So typically a contract of HAM is falling within the definition because it does both. It does construction and it also has restoration, and this is a part of one asset, one agreement. So in single contract, both the things are being done. It falls within the domain, And as I mentioned earlier, the evaluation of a bid is based upon the NPV of the total bid. It's not that part A bid construction, part B, which is O&M. So we will be separately examining. No, they simply total it out on the basis of NPV and examine it. So therefore, it must be, according to me, construed as a single contract, unless you have any other specific circumstances to point out that no, it cannot be, because accounting can never be that strict or stringent. One has to always see the facts and circumstances, but broadly looking at the HAM, it should be treated as one single contract. Now, the next is contract cost. The ICDS says that it shall be relatable, that cost which is directly relatable to the specific contract, which is attributable, which is specifically chargeable to customers. So for example, if one has to do something which he has to charge separately, then that part of the cost also has to be factored as cost. And the borrowing cost is also to be included in the cost. But that borrowing cost is to be, I will discuss this separately. It has to be as per the ICDS on borrowing cost. Now, examples can be material, labor, architect, subcontractor, higher charges for machinery, technical engineer and design fee, soil investigation, environment, GST on inputs, that is becoming cost, O&M, general insurance company overhead. So GST will not be a cost to the extent it is allowed as ITC. Then borrowing cost allocated as per ICDS 9. These are all cost. One important part of HAM is that it also allows you inflation adjustments. So money is paid on your bid, added with the inflation, and there is a combination of consumer price index and wholesale price index. So therefore, when you are applying the cost also, because you have to take estimated cost, you all know in for this purpose, you will be taking estimated cost. So while estimating the cost, you will also estimate what will be the inflation in each year, and accordingly, you will be taking the estimated cost. Now, contract revenue would be initial amount of revenue agreed, including retention and variation. So as I mentioned, variation can be in work also, and variation can be in payments also. So ultimately, whatever amount you know that you will be receiving on account of the inflation, whatever best estimate can be made, that also would have to be included. Of course, it has to be probable that they will result in revenue. And we all know, for a developing country like India, inflation is a reality. It's only the numbers can vary, but definitely it is a reality. So recognition of contract revenue, they have to be recognized when there is reasonable certainty. So whenever we know that this revenue would be coming, and we all know that this money is to come from NHAI, so certainty is not an issue to be bothered about while recognizing the revenue in the HAM projects, really speaking. Recognizing contract revenue and cost. So contract revenue and cost associated with contract should be recognized as revenue and expense by reference to the stage of completion of contract activity. So please consider the stage, and the stage to be determined either based upon the proportion of cost, survey of work performed, completion of physical proportion. So the standard talks about three things, but mainly the first two would be relevant. Either you take that what is the estimated cost and what is the cost you have incurred, proportion it out, consider that to be the work that has been completed, the stage. And or the second way can be the engineer, the site engineer may say that, look, according to me, 23% of the work has been done. So you recognize 23% of the estimate as cost and 23 as the revenue. So if I may give you the example, total construction cost is 200 and revenue, which is estimated, is 300. In year 18-19, 15 crore is the cost. So of course, 25%. If you apply the cost method, this is 25%. And by going by the survey, it was 23% work. So if you go by the survey method, it would be 23% that you will take. Then borrowing cost treatment, cost up till construction is to be treated as cost of construction. And thereafter, it will be as per the normal thing, that is on the basis of period. So change in estimates, again, as I mentioned, that each year you may think that inflation has increased more than what I guessed. So whatever is the change in estimate, that will not go to the prior period. You have to consider that only when you change the estimate. So whatever is the change, whatever is the result, change it in that year when you change the estimate. There can be examples. I'm not getting into it. We will be sharing these presentations for your benefit. So disclosure requirements are specific. What is the cost incurred and recognized profits? The amount of advances received and amount of retentions is what the ICDS requires us to do. Then revenue recognition for interest income. It says interest income, concessionaire shall recognize the interest income in terms of ICDS 4, and that shall be recognized on accrual basis determined by the amount outstanding and the rate applicable. So whatever is the amount of interest within that year of reporting, on period basis you accrue it, and against that you also treat it as an expenditure under 3613. That's quite simple. And then these are the rates which is not required to be seen. So this is about broadly about the issues in income tax, but I have highlighted that how to consider these aspects. These are long-term contracts. What can be the tables on the basis of which tax can be computed? You have to give the tax liability tables initially only, because these are all estimates. So you must know which year, how much cash flows are going to be there. You have to give those entire details. A professional only can judge what kind of scrutinies can come. All those things have to be considered. And please consider that this is a contract starting at period 0, construction for let's say 2 years, and then 15 years it has to go 17 years. You have to estimate everything in advance and put everything in place on that day in a manner that best serves the interest and balances the interest. So the law has to be taken care of, and within that law, what can be the several planning opportunities that are available to you, what kind of estimates would be there, what kind of needs would be there from perspective of selling the project. So this other very interesting aspects which will be arising from income tax angle would be, and even from GST angle would be, when you are selling the project. So all those things, because huge number, we have already seen in the table in the first presentation that huge many number of these HAMs are going to be completed this year, and when they are completed, the promoters who are specialists in construction, they are not people who are investors. They would be trying to find out investors what kind of models would be there for the purpose of selling these projects, whether it be a share purchase model, whether it be a investment model, what kind of models would be there, what best debts can be arranged for this, all these aspects, and what would be the tax implications in each of those, what would be the tax benefits in each of those. All these aspects and many more things, they are all, it's like a composite activity. And if a person can really provide a 360-degree service across all spectrums, so from the audit perspective to the tax audit perspective to the tax computations, tax planning, financial modeling, if all these can be brought together, it can really be a very good bouquet of services from the professional side. So this is all from my side for now. I will be definitely available for taking up the questions. Thank you, Kantaji. Thank you, NIRC. Thank you, Shashankji, for giving me this wonderful opportunity. And I am still there for the question answers. Thank you.
Thank you, Punitji, for your wonderful clarification and very informative that you explained the areas where the professional can work and explore opportunities. So we will discuss, it is on to us how we take it and how we use it and how we try to market ourselves for getting these opportunities. This is the biggest challenge, I would say, that marketing part is very poor in our side. There's plenty of opportunities available, but how I can market myself, then only I will be able to use all these opportunities available with us. So would you like to take questions, or we move to...
No, Kantaji, let's finish the topic and then we'll take questions.
Okay. So let's Suchi ma'am start her
And I would also request you to find out that how much time, little bit, if we can extend from our schedule.
Sure, I'll check this with the organizers. So please, Shochi ma'am, continue with your deliberation.
Thank you, NIRC. Thank you, Shashankji, and Ajayji, Sumitji, Madam Moderator Kantaji, and all the wonderful participants that have joined today, even on Sunday, which is like a holiday. Generally, CS don't keep holiday on Sunday, so this is the only holiday that we get. So joining on Sunday is really, really great to have such a wonderful discussion. So today I'll be discussing mainly on Ind AS 115 as we have already discussed, that HAM projects are generally big in number, and mainly Ind AS 115 would be applicable on the HAM projects for accounting, for computing the revenue that needs to be recognized in the books of accounts. So firstly, let me just share my presentation. Ma'am, is the presentation visible?
Yes, it's visible.
Okay. Okay. So I'll be covering Ind AS 115, then the 5 steps that have been provided in Ind AS, and then the recognition of financial asset, and contract liability, which is also part of this Ind AS only. So first we'll see that what Ind AS 115 does, what is its scope. So the scope of Ind AS 115 is for the purpose of Ind AS 115 is to provide for the guidance on the revenue that needs to be recognized in respect of the contracts that has been entered with the customers. So Ind AS 115 is actually very, very similar to IFRS 15 that has been issued by IFRS Foundation and the International Accounting Standard Boards. So as for the scope, it says that it establishes the principles that an entity shall apply to report useful information for the financial statements about the nature, timing, amount, and uncertainty of revenue and cash flow arising from the contract with customers. So basically, it helps in analyzing, and it provides a guidance so as to see and present the information for the user of the financial information, users of the financial statements, so that they can get the amount that needs to be shown or displayed in the financial statements. So Ind AS 115 is majorly, barring few exceptions, it is applicable on all the contracts that has been entered with the customer to provide goods and services for consideration. So before discussing Ind AS 115 in detail, I just want to bring your notice to Annexure D of Ind AS 115 that relates to service concession agreements. So it provides the guidance. In Annexure D is mainly similar to IFRIC 12, which has been, again, it is IFRIC 12 is a service concession agreement that has been issued by the foreign body. So Ind AS IFRIC Annexure D to Ind AS 115 is similar to IFRIC 12. So Annexure T basically provides the guidance on accounting by operators for public to private service concession agreements. It sets out general principle on recognizing and measuring the obligation and related rights in service concession agreements. So firstly, let's see that in what circumstances Annexure D is applicable. So it says that the arrangement within the scope of this appendix typically involves a private sector entity that they are calling it as operator, who is constructing the infrastructure used to provide the public service or upgrading it and operating and maintaining that infrastructure for specified period of time. So basically, Appendix T is applicable where an operator, a person who is private sector entity, who is also called an operator, is constructing the infrastructure or upgrading it, and also providing, operating, and maintaining that infrastructure for specified period of time. So apparently, if we apply para 2 on our HAM projects, so we will see that HAM projects will be covered within Annexure D. As in case of HAM, the private sector entity, being a concessionaire, is actually constructing the road, which is an infrastructure, and also operating and maintaining that infrastructure for a period of 15 years. Further, if we move to para 5 of Appendix D, a confusion may arise that whether actually HAM projects would be covered in Annexure D or not, as para 5 says that Appendix D shall apply to public to private service concession agreements if the grantor controls or regulates what services the operator must provide with the infrastructure, to whom it must provide them, and at what price. So the confusing language here is mainly pertaining to the portion of to whom it must be provided. So in case of HAM, since all the services are being provided to the government or NHI or state government or central government, so one may think that to whom is, or in this case always the government. So there's as such no leverage, whether that there won't be any changes in the scenario, that in case of ham, to whom the service would be provided, as it would be provided to government in all the cases. But if we see the information note 2, that provides a guidance on appendix D, it basically helps in interpreting appendix D. It provides that Ind AS, that appendix D is even applied to public to private agreements where the control is where the grantor himself buys all the inputs. So appendix D is even applicable in the cases where the grantor, being the government who is giving the rights, is himself buying all the inputs, as in the case of ham. So in the case of ham, the government is providing the rights for constructing the roads to the concessionaire, and they are themselves buying all the services that the concessionaire is providing. So on the basis of application guidance on appendix D, it can be concluded, or it can be seen that the appendix D to service concession agreement would apply even in the case of ham. So what does, and so now as we have seen that annexure D would apply in the case of ham, let's see what annexure D says or what it provides. So it says that the operator, who is the concessionaire in our case, would recognize and measure the revenue in accordance with Ind AS 115 for the services it performs. So in the case of ham, the concessionaire or the person who is or the concessionaire who is providing the service to the government, he has to recognize and measure the revenue in accordance with Ind AS 115. Further, what it also says that the concessionaire or the operator needs to recognize the financial asset to the extent it has unconditional right to receive cash or other financial assets. So the operator also needs to recognize the financial assets, which we'll discuss later. So two things that annexure D basically talks about is that the operator needs to recognize and measure the revenue in accordance with Ind AS 115, and the other thing which it says that the financial asset need to be recognized to the extent the operator has an unconditional right to receive cash or other financial asset for or at the direction of the grantor. So our comments in this case is that the concessionaire who is required to construct and upgrade the national highways and thereafter operate and maintain the same. Hence, it seems that concession agreement would be covered within Appendix D, as I have elaborated earlier. Further, since it is covered within Appendix D, the concessionaire is required to recognize and measure the revenue as per 115. And lastly, he has to recognize the financial assets as per financial asset as has been provided in annexure D, and financial asset has been defined as an unconditional right to receive cash and other financial asset. This part, the financial asset part, we'll discuss at the end of the presentation. So let's move on to Ind AS 115, which needs to recognize and measure the revenue that needs to be recognized by the operator or the concessionaire. So it is a 5-step process. The Ind AS 115 for recognizing the amount of revenue to be recognized and when to be recognized is a 5-step process that needs to be seen. So the first process, it's a 5-step process, and we'll discuss each step one by one. So before going to each of these steps, let's take let me explain on the case studies which we will use in elaborating on each of these steps. So the case studies that I have provided in this case is that the NHAI has awarded a contract for HAM wherein the concessionaire, who in this case is CPL, is required to construct the highway, and after construction they are required to do the O&M of the highway for 15 years. Now, as per the estimation, the cost of construction which would be incurred by CPL during the construction phase would be 500 crores, which is distributed for within 2 years. In the first year, he will incur 300 crores, and in the second year, he would further incur 200 crores to the total of 500 crores. And the estimated O&M cost that would be incurred by the contractor over the period of 15 years is 20 crores each year. And in addition to this, during the 8th year and 15th year, the concessionaire is required to incur additional 25 crores each in respect of major maintenance. Now, on the bidding part, the CPL has quoted 800 crores at bid project cost and O&M cost to be 20 crores for each of the 15 years. So I have summarized this in the table. So on the costing part, the construction cost is 500 crore, the O&M cost is 350 crores, and the revenue part, which has been quoted and agreed with the NHAI, is 800 crores for construction. So 800 crores would be considered as bid project cost, and 20 crores each for 15 years would be the O&M, which totals to 300 crores. So the total cost for the contractor would be 850 crores and revenue would be 1100 crores. Now the payment terms is it would be that NHAI would pay 40% of cost of construction of bid project cost. So 40% of bid project cost will be paid to the concessionaire during construction phase as and when he achieves the milestone, and 60% would be paid in 30 biannual annuities over a period of 15 years. And apart from that, NHAI would also pay interest to CPL on the 60% of the bid project cost that he would be receiving over the period of 15 years. And lastly, the CPL would also receive O&M payments as they have determined as they have decided, agreed upon, which is 20 crores each year. So now let's see step 1. So step 1 says is that first of all, the person who is applying Ind AS 115 needs to identify the contract with the customer. So para 9 lays down various criteria which needs to be met for fulfilling this step. So first of all, we need to see that parties to the contract have approved the contract. Second criteria which needs to be seen is entity can identify each party's right. Then the third criteria is entity can identify the payment terms or the goods or services to be transferred. Fourthly, the contract should have commercial substance, and lastly, that it is probable that the entity will collect the consideration. So if all the 5 criteria are met, then only we can proceed to the further steps. So in case of HAM, as per our understanding, all the 5 criteria has been met as the parties, as the HAM is the HAM agreement in case of HAM, which is called concession agreement, is entered, is duly executed, signed and approved by both the parties to the contract. So it is duly approved. Secondly, rights and obligations of both the parties are clearly codified in the concession agreement. Thirdly, the payment terms is also specifically provided in the concession agreement itself. In clause 23, the payment terms have been elaborated in detail. Fourthly, the concession agreement in HAM has commercial substance, as the concessionaire risk and future cash flows would change as a result of the HAM project. And lastly, in case of HAM, the contracting parties, one of being NHAI or the state authorities, thus there is fair probability that the concessionaire will receive its consideration. So all the 5 steps or the 5 criteria that has been provided in the first step of identification of the contract is complied with in respect of HAM project. Thus we can proceed further. So the second step is identifying the performance obligation. This is very crucial for the purpose of application of Ind AS 115, because as and when we'll proceed further, we'll see that the revenue would be recognized based upon the performance obligations that has been identified by the concessionaire at the inception of the contract. So these performance obligation needs to be identified with utmost caution. So the next step which requires an entity is to identify the performance obligation in the contract. So the relevant para for this for step 2 is para 22. It says that at the contract inception, an entity shall assess the goods or services promised in a contract with the customer and shall identify as performance obligation each promise to transfer to customer either a good or service that is distinct or a series of goods or service that are substantially the same and that have same pattern of transfer to a customer. So it says that at the contract inception itself, the entity should recognize the performance obligation, which is actually each promise to transfer to a customer either a good or service that is distinct. Now, in para 27 of the Ind AS 27 of Ind AS 115, they have provided a guidance. A guidance has been provided to determine whether the goods and services that has been agreed to be transferred to the customer in terms of the agreement, whether they can be considered distinct or not. So para 27 provides that a good or service that is promised to a customer is distinct if both the following criteria are met. So what two criteria it provides is? First criteria, it says that the customer can benefit from good or service either on its own or together with other resources that are readily available. So first of the criteria is that the customer can be able to get the benefit from the goods and services that are being provided in the contract on its own or together with other resources. And second criteria, it says is that the entity promised to transfer the good or service to the customer is separately identifiable from other promises. So the entities, if entity says that it will transfer these goods and services, so it should be separately identifiable from the contract itself, and both of these criteria should be met simultaneously. Only then we can say that the goods and services that needs to be transferred or that needs to be delivered to the customer are distinct, so they need to be satisfied together. So further, one more para which needs references, para 29. It provides the guidance wherein we can see that whether goods and services can be said to be distinct or not. As per this para, it says that, I'm only reading the relevant part. It says that, in other words, the entity is using the good or service as input to produce or deliver the combined output or output specified by the customer. Combined output or outputs might include more than one phase, element, or unit. So essentially what para 29 says that while determining whether the goods and services that are being transferred by the entity to the customer are distinct or not, one must keep in mind that the goods and services that he's saying that they are distinct should not be an input to the service that is actually being provided. For example, where a person enters into an agreement to construct a hospital for its customer, so in that case the entity is required to do a lot of things, like they have to first see the site, they have to do the site analysis, then they have to construct the base of that hospital, and then they have to construct the building, they have to put the fittings, electrical fittings, and along with that they are also required to provide the equipment. So in this scenario, it can be seen that whether all these activities needs to be considered as distinct, and thus they are to be considered as separate performance obligation, or the performance obligation in this case is construction of hospital. So in terms of para 29, it says that the contract is for the construction of hospital and not for those individual inputs that together makes the single supply of construction of hospital. So all these criteria needs to be kept in mind while determining the performance obligation. So let's see that in HAM projects, what all performance obligation would be there. So in case of HAM, the contractor essentially required to provide two major services. One is construction service and other one is O&M service. And as we can see in para 27, there are two criteria which I have already discussed, like that the customer can benefit from good or service either on its own. So if we see that in case of even from construction as well as from O&M, the NHAI can benefit from those goods and service on their own. They are separately, they can be separately identified, like the NHAI can even go for the can even get the contract of construction even from a separate contractor. So it can so the NHAI is capable, so construction service as well as the O&M service promised by the concessionaire and to NHAI capable of being treated as distinct in accordance with para 27A, especially because as the construction service as well as O&M service on their own provides the benefit to NHAI, also for the reason as NHAI can procure both of these services from different entities. So it is not necessary that NHAI needs to get these services done from the single entity. So from this also we can understand that these are two different performance obligation. The second criteria, which is provided in para 27B, is also met in case of HAM projects, as construction service and O&M are separately identifiable under the contract, as separate bidding has been provided, Further, the time period for doing both construction as well as O&M are also separately identifiable from the contract itself. So as per our understanding and analysis, as per our understanding, we are of the view that in case of HAM contracts, there are two performance obligations, which one of which is construction and another is operation and maintenance service. So as we have seen that step 2, in which we need to identify the performance obligation, there are two performance obligations. One is construction and the other one is O&M service. Now let's proceed to step 3, which is determining transaction price. So in this, while determining the transaction price, the entity needs to consider the terms of the contract and its customary business practice to determine. So two factors that are essential for determining the transaction price is terms of the contract and its customer business practices. So these two should be kept in mind while determining the transaction price. Further, the transaction price is the amount of consideration to which an entity expects to be entitled in exchange of transferring promised goods or services to the customer. So basically, it is the amount which the entity expects that it can get or derive from its customer when it transfers the promised goods and services to the customer. And from this, there needs to be exclusion. An exclusion has been provided, which is an amount that is collected on behalf of third party. For example, the indirect taxes, which needs to be deposited to the government. So that amount needs to be excluded while determining the transaction price. Then para 49 says that it is an important guidance for determining the transaction price. It says that entity shall assume that the goods or services will be transferred to customer as promised in accordance with the existing contract, and the contract will not be cancelled, renewed or modified. So it says that the transaction price needs to be determined on the basis of the fact that the contract will be undertaken or would be complied with as and when promised or as and when agreed between the parties, and there will be no cancellation, renewal or modification. And otherwise it will be very difficult to determine the transaction price because there are so many uncertainties in the market. So they have clarified that we will assume and we will assume that for determining transaction price, it will be assumed that everything will be go as it is agreed between the parties. So in HAM projects, as I have elaborated in the example and as already discussed, that the concessionaire or the contractor who bids for the HAM project, he needs to quote two different price. One is construction price, which is also called bid project cost, and other one is O&M price. So in this case, there can be two scenarios for determining the transaction price. In first scenario, it can be assumed that the price quoted for each of the performance obligation, that is construction and the O&M, is same as consideration expected in exchange of promised service. So let's suppose if a person quotes a bid for in a HAM project wherein he says that bid project cost will be 500 and O&M over a period of 15 years will be 200 crore rupees. So in that case, if that entity understands or if they expects that this is the actual transaction price which they expect to be received in exchange of the promised services, then the same price which has been quoted in the agreement can be considered to be transaction price. Whereas there can be another scenario wherein the price quoted for each of the performance obligation, that is construction as well as O&M, is separate from what the entity expects to receive in exchange of the promised goods and services. So for some reason, the price quoted in the bid is different from the price what they expects to receive in exchange of the promised goods and services. In this case, first of all, we need to determine the transaction price for each of the performance. In this case, first we need to determine the transaction price for whole of the HAM contract and then the performance obligation. Then that complete transaction price needs to be allocated between the two performance obligation on the basis of the principles laid down in step 4. So generally, in case of HAMs, mostly the EPC contractors are getting involved for bidding in case of HAMs. So what they do is they quote a higher price for the bidding for the construction part. So for example, like even in our example, we have elaborated that the construction cost was only 500 crores, but the bid project cost, that is the amount that has been quoted in respect of construction was 800 crores, which is quite a high amount of margin. That is, which is a quite a high amount of margin. Whereas if we see the O&M part, so the cost that would be incurred for O&M was 350 crores, but the revenue quoted for the same was 300 crores. So what they are doing is, what contractors are, EPC contractors are doing while bidding for HAM is they are keeping the bid project cost to be a higher side, while they are reducing their margins from the O&M cost that they are quoted. So in this scenario, if that is the case, then this scenario 2 that I have explained in this that I have explained previously needs to be followed. That is, we need to first determine the transaction price for whole of the HAM contract, and then the transaction price should be allocated between each of the performance obligation based on the principles laid down in step 4. So this is the manner of determining the transaction price. Further, there are few more points that needs to be considered while determining the transaction price. One of this is variable consideration, and the other one is the existence of significant financing component in the contract. As we have discussed that in case of HAM projects, the contractor receives the payment, O&M payment and BPC payment after adjustment for inflation. And the inflation here, we need to consider the inflation for 17 years. Like for example, if we take that the construction is completed within 2 years, then 2 plus O&M years of 15 years. So total project becomes 17 years, and the inflation needs to be determined for the period of 15 years. So the amount of inflation, amount of contract cost that is adjusted for inflation would be considered as variable consideration. As on day one, we don't know that what inflation would be there at year 3, year 4, year 5. So that is variable based on the actual inflation that is happening. So that would be a variable consideration, and we need to consider, as a chartered accountant, we need to consider this inflation very, very we need to give a lot of thought and effort while considering the inflation that would happen over a period of 17 years for computing the bid project cost as well as the O&M cost. So while estimating the variable consideration, which is based on inflation factor prevailing over the period of 17 years, there shall be a substantial degree of estimation. However, the accountants have no option but to make best possible estimates. So best possible estimates needs to be made, and these estimates should be made on the basis of the past experience as well as the future possibilities, or the future what we expect from the future. So estimation should be made based on these factors. And like for example, in third year, if we think that the estimation that we made at year 1 was not correct, then we have to again make the estimation, which is which is the best possible based on the scenarios or based on the facts that are available to the chartered accountant at that point of time. So this is the variable consideration. Now, the other thing that needs to be considered is that while determining the TP, the entity has to adjust the promised amount of consideration for the effects of time value of money. By time value of money, it means that the TP should be the cash selling price. So the entity should determine the TP as the price for which the goods and services would be transferred to the customer if the payment is made on that particular day. So while determining TP, the significant benefit, the financing component needs to be set aside, and only the cash selling price should be considered while determining the TP. So para 60 is very relevant, is very, very relevant for the purpose of determining the transaction price, and for adjusting the transaction price for the significant financing component in the contract. It says that in determining the transaction price, an entity shall adjust the promised amount of consideration for the effects of the time value of money if the timing of payments agreed to by the parties to the contract provides the customer or entity with the significant benefit of financing the transfer of goods and services to the customer. So it says that we have to remove or eliminate the effect of financing that is being shown in the amount that has been agreed as per the agreement. So, for example, if a person says that if I'll sell you a house today and you will make the payment to me by today, then I'll sell you for it for 1 crore rupees. Whereas if you make the payment to me after 2 years, then I'll charge you 1.21 crores. So, for determining the transaction price for determining the transaction price, we need to reduce or we need to adjust the transaction price for the significant financing component. And if the customer says that yes, I'll make the payment to you after 2 years for 1.21 crores, then we need to reduce this finance, because if the payment is made on day one, then the price is only 1 crores, whereas the payment is made on after the end of 2 years, the payment is 1.21 crores. So it is mainly for the financing component. So that portion needs to be eliminated for purpose of computation of transaction price. So in our example, or in case of HAM, the concessionaire is financing significant project of the bid project cost, that is 60%, as 40% is paid during construction and 60% is the amount that the concessionaire is financing, and that 60% is received during the 15 is only received during 15 years in biannual installments. So basically concessionaire is financing 60% of the amount for which he is receiving interest at the rate of 1 year MCLR of top 5 scheduled commercial banks plus 1.25%. So from that TP, what we need to do is we need to reduce the significant financing component. What remains would be the amount of TP. So it is here for the management to consider and decide that the price quoted in the agreement, whether it is a cash selling price or whether there is any significant component of financing. So it is the management to decide that whether the interest of MCLR plus 1.25% that the concessionaire is receiving or that they are receiving from NHAI is enough, and it can be said to be it is enough, or it is compensatory for the financing part, or there is something extra that is there in the bid project cost on account of financing. So the management has to decide and see whether the project cost that has been quoted has some element of financing or not. So in the case studies, we haven't taken any financing component. So in this, the transaction price for the complete HAM project, which has been allotted to CPL, would be 800 crores, that is BPL, plus 300 crores, that is O&M cost. So the total is 1100 crores. Further, in the case studies, we have not taken, for ease of understanding or for ease of explanation, we have not taken any inflation into account. So inflation is also need not to be considered for the purpose of case study, but in reality inflation is there, and as a chartered accountant we need to take the best possible estimates for accounting for the inflation as a variable consideration. Now the fourth, since we have computed the transaction price for whole of the contract, now what we need to do is we have to allocate the transaction price that we have determined for the whole project on each of the performance obligation, that is construction and O&M. So para 73 is very relevant for this. It says that the objective when allocating the transaction price is for an entity to allocate the transaction price to each of the performance obligation in an amount that depicts the amount of consideration to which the entity expects to be entitled in exchange for transferring the promised goods or services. So if we see that this language is very similar to the definition of transaction price, even transaction price says that transaction price is the amount of consideration to which the entity expects to be entitled in exchange of transferring the promised goods. So the objective of allocation is also same. It is the objective of allocation is to determine the transaction price of each of the performance obligations. So it needs to be determined on the basis of what entity expects it to receive in exchange of transferring the promised goods or services. To meet that objective, the allocation needs to be based on relative standalone selling price. So as per 74, it says that allocation needs to be done on the basis of relative standalone selling price of each of the performance obligation. So what is relative standalone selling price? Para 79 provides 3 methods for determining the standalone selling price. These methods are only illustrative and they are only limited. standalone selling price, first method it says adjusted market approach. So it is the price that entity, if the entity sells a similar product in the market, and the price which it receives for selling that similar product, that would be adjusted market approach. Second approach is expected cost plus cost plus margin. In this approach, first of all, we need to determine the price, and based upon the margin we determine the a standalone selling price. And thirdly, there is a residual approach. So residual approach is residuary, and anything that is that seems to be relevant from the facts of the circumstances can be applied. That is the residual approach. So these are based upon the facts and circumstances of each approach, each of the case. So as per our understanding, in case of HAM project, adjusted market, it is very difficult to apply the adjusted market approach, as each road and each project is very different, and it is very difficult to determine the selling price, or what the customer or what the competitor would receive from the road projects. So as per our understanding, for computing the stand-alone selling price, expected cost plus margin approach is an appropriate method for computing the stand-alone selling price for the purpose of allocating the transaction price. So in this case, first of all, what needs to be done is, like, the total estimated, I'll just explain this with the help of the example case studies that I have mentioned in the beginning. Like, the total cost of the whole project is 850, which is 500 cost of construction, and 350 is O&M, and total contract price is 11 crores, as the total TP is 1100 crores. Now we need to allocate the 1100 crores to construction as well as an O&M. So 500 and 350, to that the margin is 29.41 crores, which is 1100 minus 850 is 250. So divided by 850, which is cost. So margin on cost is 29.41 crores. So we have just added the cost and margin to them, which is cost of construction, allocated TP of construction becomes 647, and O&M comes to 453. This is this allocated transaction price is derived on the basis of cost, which is 500, plus the margin, which is calculated at 29.41%. So in case of construction, the cost is 500, margin at 147. So allocated transaction price comes to 647. Likewise, in case of O&M, the transaction price comes to 453. So if we see it from contrast from the revenue that has been quoted, so in respect of construction, we have quoted 800 crores, which is much more than the allocated transaction price, whereas in case of O&M, we have merely quoted 300, whereas the allocated TP is 453 crores. So the purpose of this allocation is for determining the revenue, for recognizing the revenue. So what we are saying from this is, although we have quoted 800 crores for construction, but for the purpose of recognizing the revenue and recognizing the correct revenue, which provides any useful information to the user, what price what total price we will consider is 647 crores, which shows the actual margin, or which shows the actual amount that the entity expects from the construction activity. So now the fifth steps and the final step is recognizing revenues. Now what we have done, the base, we have made all the preparations that needs to be done to see how much revenue needs to be recognized each year. So for recognizing revenue, Ind AS 115 says that entity shall recognize revenue when the entity satisfies a performance obligation by transferring promised goods or services. So it says two things, that and recognize revenue should be recognized when entity satisfies a performance obligation, and how it satisfies is by transferring the promised goods and services to the customer. And the asset is said to be transferred, or it is said to be transferred, that the goods and services has been transferred only when the customer obtains the control of that asset. So we need to see that whether the performance has been satisfied. So for recognizing revenue, we need to see that whether the performance obligation has been satisfied or not. So here one more thing that is very important to see is that in case of HAM projects, it is not a simple project that it is only spread over 1 month, 2 months, or it is just done at a very short span of time. These HAM projects are spread over various financial years across almost 17-18 financial years. So it is very important to determine that when we need to recognize the revenue. Is it the first day on which the contract has been entered? At that point we need to recognize revenue, or we need to recognize the revenue on the last date when the contract is finalized, or is there any midway for recognizing the revenue? So for this purpose, para 35 comes into place. It says that the entity, so for recognizing the revenue, what we need to see is whether transfer of control, when is that the transfer of goods or service, or transfer of control of goods and service are taking place. So para 35 provides two scenarios, whether the transfer of control takes place over time or at a point of time. So para 35 elaborates on the case where we can say that the transfer of control of goods and services are taking place over a period of time. It provides three criteria, and even if one of the criteria is met, we can say that the transfer of control of goods and services are taking over a period of time. We'll discuss in some time that if the control is transferring over a period of time, what implication it will make. But first see what para 35 says. That para 35 says that entity transfer control of goods or services over time and therefore satisfies our performance obligation, recognizes revenue over time. So if transfer is provided over a period of time, then the revenue is also recognized over time if one of the following criteria is met. So first criteria is customer simultaneously receives and consumes the benefits provided by the entity's performance as the entity performs. Second criteria is that the entity performance creates or enhances an asset that the customer controls, that the asset is created or enhanced. And the last criteria which it provides is that the entity's performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed to date. So if even one of the criteria is met, then we can say that the entity transfers control over time, and thus revenue can be recognized over time. So let's see, as per our understanding and as per our analysis, in case of HAM projects, the first criteria is met as the customer, being NHI, simultaneously receives and consumes the benefit provided by entity's performance. In case of HAM, it is very difficult to see that whether the customer, being NHI, is simultaneously receiving and consuming the benefit or not. For this, in the guidance note to the Ind AS 115, they have provided the guidance that in some cases it is very difficult to recognize that whether the customer is simultaneously receiving the benefit or not. In that case, what needs to be seen is whether the customer, if in case the contract is cancelled and the customer employs some other contractor or some other service provider for doing the same thing, whether that service provider has to substantially redo the work, or whether he can use the work that has already been done by the previous entity. So in case of HAM, if we see that if a contractor is constructing a road and he's laying down the load, he's making the foundations for making the road, so the amount of work that he has already done on the site or on the land of NHAI is whether NHAI, in case the contract with that entity cancels for some reason or is rescinded for some reason, whether the new contractor who would be employed by the NHAI, he has to substantially redo the work or not. In our opinion, in our understanding, the new contractor who would be employed by NHAI, he is not required to substantially redo the work that has been done by the previous contractor, as he is not required to substantially redo the work. So the criteria provided in 35A is satisfied, and we can say that the performance obligation is satisfied over time, and hence revenue can be recognized over time. So criteria provided in 35A is met. As per our opinion, it is met, and the revenue needs to be recognized over time. Now, where the revenue is to be recognized over time, now we have to see that by what method we have to see that how much revenue needs to be recognized. So there are two methods that they have provided. One is output method, the other one is input method. Output method is basically method which provides that for recognizing revenue, for determining that how much performance obligation has been satisfied, how we need to determine that. So for that, output method says that you can use surveys, you can see the appraisals of result achieved, milestone achieved, time elapsed, or unit produced. So in HAM, Output method can also be used, as in case of HAM, the concessionaire, or in case of HAM, the NHAI, they are engineers, they're independent engineers who are employed by the concessionaire, as well as the NHAI, who regularly provides their updates on how much work has been done. And secondly, there is a method, input method. Input method is based upon the costing that has been incurred. So in this, even this method can be employed. So we need to see that in our facts and circumstances, which method is more appropriate to be applied to recognize the revenue. In case of input method, one thing needs to be seen, that the future expenses should not be accounted for applying this input method. So based on this, the revenue needs to be recognized. Like in case of, I'll just go through the last slide, which provides for the manner in which the revenue needs to be recognized in the given example. For example, like in case of our example, 500 cost of construction was incurred in year 1. Thus 60% of the 300 cost was incurred in year 1. Thus 60% of cost was incurred in year 1. So 60% of allocated TP that we have allocated in step 4, that needs to be recognized in year 1. Likewise in year 2, 40% of construction cost is incurred. So 40% of allocated TP. Here we need to see the allocated TP and not the amount of bid project cost that is quoted in the bid. So allocated 40% in year 2, 40% of allocated TP need to be recognized. Likewise in case of O&M, since 20 crores would be incurred in each of the year, so which comes to 5.7% of total O&M obligation. So in each year, except for year 10 and 17, in which major maintenance is to be incurred, 5.7% of the allocated TP of O&M needs to be recognized. And for the year 10 and 17, where major maintenance is incurred, in that case, in year 10 to 17, the cost incurred would be 20 plus 25. 20 is regular O&M and 25 is major maintenance. So 12.86% of total O&M cost would be incurred, and thus the O&M, the allocated TP of O&M of 12.86% would be recognized in year 10 and 17. So this is actually I was also required to discuss financial asset contractors and but due to shortage of time today, I think it is better that if I end my presentation till step 5 of revenue recognition. So thanks a lot to everyone for the patient hearing. Thanks a lot.
Thank you, Suchi ma'am, for your wonderful deliberation. It was quite elaborative, and you tried to do what best you can do in such a short span of time. So thank you so much for all your effort which you have done to explain the things. As Ind AS 1 and 5 is all very fancy section, I would consider at my end, and always want to learn more and more about this section. But you need to have special time for all this. 15-20 minutes or half an hour is not enough for this segment. We will keep another session. I would request NIRC members to take another session which will focus only on Ind AS part. So thank you for whatever you could do in that short time.
बिल्कुल 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 ठीक कह रहे हैं कांता मैडम आप। जी जी जी, आपने बिल्कुल ठीक कहा। सेशंस तो यहाँ चलते ही रहेंगे, बिल्कुल चलते ही रहते हैं, पुनीत जी को पता भी है। मेरी आवाज आ रही है सभी को? हाँ जी, इंडिया पे तो हमने सीरीज चलाई है, इंडिया पे तो हमने सीरीज भी चलाई है, और ये तो क्या, एजुकेशन तो एक कंटिन्यूअस प्रोसेस है, ये तो चलता ही रहेगा। इंडिया भी आएगा, जो आज डिस्कशन किया ये भी आएगा, ये चलते रहेंगे। डेफिनेटली वी विल टेक केयर ऑफ इन द कमिंग सेमिनार्स। डेफिनेटली वी विल पुट ए, वी आर प्लानिंग ए रिफ्रेशर कोर्स ऑन इंडिया। बल्कि हम ये सोच रहे हैं कि एक पूरा रिफ्रेशर कोर्स ही डिजाइन कर दे इंडिया पे 5-6 रोज का, क्योंकि हाँ, क्योंकि हमने स्टूडेंट्स का तो अभी 5 दिन का रिफ्रेशर कोर्स किया था, तो काफी मेंबर्स की भी हमारे पास रिक्वेस्ट आई थी। और थैंक सुरुचि जी, थैंक पुनीत जी को तो हम बार बार तंग करते ही रहते हैं। ऐसा लगता है जैसे हमारे रेगुलर, जब हमें कुछ लगता है कि अब किसी ऐसे टॉपिक पे डिस्कशन करना कि विच नीड द लीगल एंगल आल्सो, देन वी डेफिनेटली वी मिस द पुनीत जी, और तुरंत पुनीत जी हमें समय भी दे देते हैं। तो हम पुनीत जी का भी बहुत बहुत धन्यवाद करना चाहूंगा। ऑल्दो आई एम ऑन ड्राइव, फिर भी मुझे पता लगा कि अभी एंड होने वाला सेशन, और वोट ऑफ थैंक्स करना भी, क्योंकि ये जरूरी है। आप सभी आए हैं। सूची जी आपने, मैं देख रहा था,
अभी वोट ऑफ थैंक्स का समय नहीं आया, थोड़े क्वेश्चन आंसर भी हैं, अभी रुको आप।
अभी है क्या? मुझे तो लगा कि कांता मैडम ने कर दिया।
ना आप गाड़ी में हो ना, कहीं पे आवाज में मिस हो गया। अभी काफी सारे
अच्छा,
क्वेश्चंस आए हुए हैं, पार्टिसिपेंट्स
चलो
वेट कर रहे
प्लीज
हैं।
प्लीज आप क्वेश्चंस ले लीजिए प्लीज।
हाँ जी, हाँ जी।
So there's a question from Nitin Kumarji. If annuity is exempt from tax, whether NHAI have to deduct TDS and GST on annuity payment?
नितिन जी, बड़ा इंटरेस्टिंग क्वेश्चन है। वहां पे जो वर्ड यूज्ड है वो टैक्सेबल गुड्स और सर्विसेज है, और ये वर्ड डिफाइंड नहीं है। इफ आई रिमेम्बर करेक्टली तो इसके ऊपर कोई क्लैरिफिकेशन भी नहीं है। लेकिन मैं आपको सुप्रीम कोर्ट का एक डिसीजन याद कराता हूँ। इट इज कॉल्ड भवानी कॉटन मिल्स। इट सेज दैट फर्स्ट कलेक्टिंग एंड देन रिफंडिंग, दिस इज नो सोलेस टू अ टैक्स पेयर। इफ समथिंग इज नॉट टैक्सेबल, you can't collect tax as well. So this is something one has to go to the court and argue. But I am answering it off the cuff without examining. It needs to be little bit more examined. But TDS में आपके पास ये provision है, you can go for lower deduction certificate, and even that has been considered to be justiciable by the higher courts. So even though there is no appeal, the matter can be taken into writ petitions, and the court can examine if the AO has rightly considered that or not. But in GST, there is no such provision, if I remember correctly. So in that case, you have to directly go to the court and say, how can there be collection if there is no tax?
So next question is from Akshay Chavan. Exemption is specifically provided for the annuity in case of NHAI, that is road project. However, no such exemption is given to the annuity in other HEM projects. That
So
is
I think that itself answers the question, madam. If there is no exemption, it is taxable, because GST is a tax with a negative list. So everything is taxable unless it is exempt or it is in Schedule 3.
Okay, so next question is from Nitin again. Nitin Kumarji, if the annuity is exempt supply, then whether we have to take input during construction proportionately, or we can take.
I think that has been answered in detail. He might have raised this question beforehand.
Yeah.
We can
The
move to the next.
4060 formula is also applicable. Just 4060 formula is also applicable for EPC contract for exemption of GST. That is the question.
Ma'am, sorry, एक बार repeat कर दीजिए, please.
The 4060 formula is also applicable to EPC contractor.
No, it is not. It is not. It is not. EPC is not, because the EPC contractor gets consideration only for construction. He doesn't get anything for as annuity for granting the access to a road or the bridge. So therefore, it is not. 4060 doesn't apply.
So next question is from Akshay Chaman. That is, I think I have taken. Dear Punit sir, tax rate is applicable at 22% or 17%, whether, just a minute.
I don't know which 22 and 17 he is referring to. He has to clarify. So चौहान साहब आप दोबारा लिख दीजिए, Q&A में थोड़ा clarify कर दीजिए, clear नहीं है, detail में लिख दीजिए question.
Next is from Shashi Kumar. Sir, can you please upload the recording? वो हो जाएगा on YouTube. It is already there. Please discuss whether the interest cost to be taken or not for POCM.
Interest cost, so I have dealt in detail. Please see the slides. We will be sharing those slides that will be available. That's dealt in detail.
Next question is from Deependra Mohan. Do we need to know the reversal of ITC remaining on the competition data? Competition data, I think, in the HEM project. Computation होगा, I think it's not computation.
हाँ जी, हाँ जी. तो again, madam, ये तो हम detail में discuss कर चुके हैं topic बिल्कुल.
So if annuity exempt supply, then whether we have to take input during the construction proportionately, or we can take full.
Again, the same question. We have stated that this aspect is being dealt with by the Rajasthan High Court, and according to us, this is not an exempt supply at all. This is, if at all, only a partially exempted supply, and partially exempted supplies do not attract reversal. So the second part we have discussed is, as a professional opportunity, you should try and optimize the credits in the hands of the SPV, maximize them in the hands of EPC, so that there is no overflow and least risk scenario.
Next is from Satish Lalwani. Is TDS need to be deducted while making any payment to NHAI, on which TDS need to be deducted?
Actually, here we are receiving the payments, so it is not a question relating to HAM, but in any case, if income tax TDS is not to be deducted where it is wholly exempt.
Yeah. So I think these are all the questions, and if anybody else want to ask any question, they may write to NIRC members, they may convey to it Punit ji and get clarification. Am I right, Ratan ji, or organizer Shashank ji is there? Okay, I will convey this. I think they have left the session.
And lastly, I think if there was a question in
नहीं, I
between.
am there, I'm here. बिल्कुल ठीक बात है.
ईमेल पे
सवाल
लिखिए
तो
question.
हाँ जी, आपका भी कोई है तो ले लीजिए, कोई दिक्कत नहीं है, इतनी बड़ी कोई.
और उसके अलावा मैडम आपने एक इशू रेज किया था बीच में, फाइनेंशियल मॉडलिंग को लेके थोड़ा सा कुछ किसी ने एक सवाल किया था कि थोड़ा सा इलैबोरेट कर दें, तो अभिनव जी आप थोड़ा फाइनेंशियल मॉडलिंग के ऊपर थोड़ा सा इलैबोरेट कर दें, स्पेशली विद रेस्पेक्ट टू प्रोफेशनल अपॉर्चुनिटी एंड व्हाट इज द प्रोसेस, थोड़ा सा डिटेल आउट कर दें उसको.
करेक्ट. सो आई थिंक कुछ क्वेश्चंस डायरेक्टेड थे टुवर्ड्स माय सेशन, तो वो मैंने एक्चुअली ऑलरेडी चैट में आंसर कर दिए मोस्ट ऑफ द थिंग. आई थिंक स्पेशली ऑन फाइनेंशियल मॉडलिंग, see it is quite important for these projects, and this is primarily for two reasons. एक तो आप देखेंगे कि जैसे हमने कहा था कि these projects are typically done through a non-recourse financing, meaning कि आपको banks के पास जाना है and आपको debt raise करना है. Now to do that, financial model plays a key role because that gives the picture of the cash flows in future and how this debt would be serviced over time. So it's really important कि जो आपने cash flows model किए हुए हैं when you are submitting to the bank, that needs to be accurate. And the second part is the financing documentation part of it. जो documentation है, आपके information memorandum बन रहा है, जो bank की सारी formalities है. Now all these things, as I said, because these developers are so new, some of these developers are quite new, so there is an opportunity that you handhold the client to help them secure this debt. So that is one part of it. And because उससे क्या होता है कि if you are not there, तो sponsors are in a pickle, the clients are in a pickle, because उनको फिर lot of questions are being asked from them कि आप कैसे कर पाओगे, आपका क्या experience है, and a lot of time the sponsors are then asked to provide a corporate guarantee, which essentially defeats the purpose. जो आपका non-recourse financing था, meaning कि the sponsors को कोई impact नहीं होना चाहिए because the project is being financed. Now sponsors को impact होगा because the corporate guarantee is being asked. So there were a few questions about that as well, and some of the possible reasons that this corporate guarantee is being asked from the sponsors is because of this important reason that the model is not correct. मतलब the bankers are not very confident कि जो आपने उनको model करके दिया है, whether that is a reality or not. And there are few things missing from there. So when we talk about financial model, a lot of people only focus on the costs and the revenue, but they miss out on aspects like taxation. GST calculation उसमें नहीं होगा, उसमें income tax calculations ठीक से नहीं होगा, उसमें accounting calculations ठीक से नहीं होगा. Like we talked about this 5-step revenue recognition process, this is not there. How to allocate the transaction price into construction and operation because it's a single contract. So when all these aspects are missing from the model itself, then the banks do not have that confidence. So I think that modeling is an integral part of this exercise. It's very important because this is used during the bid stage as well as and during the financing, during the operation, through the entire life cycle of the project for the 15 years. So it's a long-term model that you're making. So don't treat it as a single one-time exercise for the bidding purpose. You need to handhold the client for the entire 15 years. So I think that's the opportunity. And with that mindset, you have to work with the client. Just don't take it as a one-time exercise. I think that's the only message.
राजकुमार जी भी हाथ खड़ा कर रहे हैं, कुछ पूछना चाह रहे हैं शायद.
उनका काफी टाइम से खड़ा है.
अच्छा. तो या तो वो खड़ा करके भूल गए होंगे. एनीवे, अभी कांता जी कुछ और भी हैं, कुछ सवाल बच्चों के या सॉरी मेंबर्स के, मैं या फिर हम
बच्चों की आदत पड़ गई है.
हाँ, बच्चों की आदत पड़ गई ना, वो ठीक कह रहे हो.
बट वो कई बार रिपीट में भी आ रहे हैं, तो आई एम अनेबल टू एनालाइज.
नहीं, रिपीट करने की जरूरत नहीं है. और मैं देख रहा था पुनीत जी आंसर्ड वेरी वेल, क्योंकि जो भी क्वेश्चंस रेज कर रहे थे मेंबर्स, आई थिंक सो दैट ऑल क्वेश्चंस कवर्ड ड्यूरिंग द डेलिब्रेशन. तो आई थिंक सो जिनको कोई अगर है इशू तो वो हमारी वीडियोस देख लेंगे जैसे बताया, और पीपीटी भी जैसे आएंगे तो हम अपलोड कर देंगे हमारे चैनल्स पे. हमारे जो लिंक्स हैं उस पे जाकर वो देख सकते हैं, डाउनलोड भी कर सकते हैं. एंड थैंक यू सुरुचि जी, थैंक यू पुनीत जी, अभिनव जी, जिन्होंने इतना नाइस. हाँ जी.
मैं जिन्होंने भी क्वेश्चन पुट अप करे हैं ना, अगर हम उनको राइटिंग में रिप्लाई भेज दें उनके ईमेल पे, दैट वुड बी मोर हेल्पफुल फॉर देम, कि उनको फ्यूचर रेफरेंस हो जाएगा और एक उनके लिए उनके इनबॉक्स में भी आ जाएगा, परमानेंट रिकॉर्ड हो जाएगा कि उन्होंने एक क्वेश्चन पूछा था, उसका रिप्लाई, फॉर्मल रिप्लाई आ गया स्पीकर से, स्पेशलिस्ट से, पैनलिस्ट से। तो दैट वुड बी ब्राउनी पॉइंट फॉर NIRC कि हाँ उन्होंने हमारे क्वेश्चन को बहुत अच्छे से टेक केयर करा। तो दिस इज माय सजेशन फॉर द NIRC टीम, इफ दे कैन दिस।
थैंक यू कांता जी, थैंक यू। क्वेश्चंस क्या होता है कि ये ओपिनियन ऑफ द स्पीकर्स है, तो मैं डिफर फ्रॉम स्पीकर टू स्पीकर हो सकता है, तो ठीक है, उनको बता दिया है, वो अपने लेके जाएं कि उन्होंने क्या सोचा, क्या पाया, ये तो जरूरी है ना। थोड़ी मेहनत तो मेंबर्स को भी करनी चाहिए, उनको ये नेल तो करना चाहिए ना, ये नहीं कि आए और बस चले गए। तो कोई बात नहीं, फिर भी अच्छा सजेशन है डेफिनेटली। और ये तो बल्कि एक सवाल पूछता तो जितने ज्वाइन किए हुए सबको कहीं ना कहीं जवाब मिल जाता है, और बैक ऑफ माइंड वो डेफिनेटली रहता है। जब कभी आपको उस क्वेश्चंस में, वो सिचुएशन में आप जब फंसेंगे, डेफिनेटली वो आपको याद आएगा कि हाँ NIRC में हमने ये प्रोग्राम देखा था। और आज तो जरूरत भी नहीं है, क्योंकि आज तो टेक्नोलॉजी का जमाना है। हमारे यूट्यूब चैनल पे जब जाएंगे इस प्रोग्राम को, आप तब सुन सकते हैं कि आपने क्या पूछा और हमने क्या बताया। तो वो रिपीटेशन का मुझे लगता नहीं कि आज के टाइम में जरूरत है, क्योंकि सब कुछ तो अब ऑनलाइन है, सब कुछ यूट्यूब पे हमारा रखा हुआ है। फिर भी कभी ऐसा लगे किसी मेंबर्स को, तो वो NIRC को लिख सकता है, हम फिर से एक बार जो हमारे स्पीकर से उनसे उनके ओपिनियन लेके डेफिनेटली उनको बता सकते हैं, इफ डिफर फ्रॉम द ओपिनियन एज शेयर्ड बाय द स्पीकर्स। तो इन सब के साथ मैं पुनीत जी का, कांता जी का, अभिनव जी का, मैडम का बहुत बहुत धन्यवाद करता हूँ, और हमारे चेयरमैन साहब भी जुड़े हुए हैं। तो आई इनवाइट चेयरमैन साहब फॉर द क्लोजिंग रिमार्क्स। शशांक जी।
थैंक यू यादव सर, एंड मैं पूरी आपकी जिम्मेदारी भी महसूस कर पा रहा हूँ, एंड आई एम रियली फॉर माय टीम कि हम सब लगे हुए हैं ऑन द संडे। एंड सबसे पहला धन्यवाद हमारे स्पीकर्स को, पुनीत सर, सुचि जी एंड अभिनव जी को, जिन्होंने इस टॉपिक के लिए, मैं ये कहूँगा कि हम 2.5 घंटे से ऊपर कनेक्टेड हैं, एंड दिस टॉपिक, बट आई रियली फील दैट इज रेलिवेंट, एंड द अपॉर्चुनिटी, क्योंकि जब सर ने बोला 1,000 करोड़ रुपीस, उसके बाद मेरे को नहीं लगता कोई मेंबर हिला। एवरीबडी वांट्स टू नो मोर एंड मोर अबाउट दैट 1,000 करोड़ रुपीस, बिकॉज
कुछ तो आ जाए उसमें से।
1000 करोड़ इन्वॉल्व होते ही बहुत सारे काम इन्वॉल्व हो जाते हैं।
I personally understand that the figures and the facts and the numbers, ये तीन चीजें ऐसी होती हैं, people generally put the hold on that things कि हाँ मैं समझता हूँ कि क्या चीज और कैसे हो रही है। So thank you sir for first of all telling us that it's 1,000 crore.
शशांक जी, एक चीज और आपके माध्यम से कहना चाहता हूँ that we have shared that presentation containing the opportunities which will also be uploaded on the
That will be wonderful.
That definitely, वो तो हम लोड कर ही देंगे डेफिनेटली।
जो मैम की क्वेरी थी कि जो क्वेरीज अभी मेंबर्स की पेंडिंग है, तो मैं जरूर कहना चाहूंगा कि पुनीत जी बिल्कुल NIRC के एक बहुत ही आप कह सकते हैं अच्छे मोती हैं, और शुचि जी भी, अभिनव जी भी। तो कोई भी क्वेरी कभी भी आए तो मेरे को नहीं लगता पुनीत जी उसको एड्रेस करने में आपसे मना करेंगे। आप सबके पास उनका नंबर है, आई थिंक प्रेजेंटेशन में भी ही हैज मेंशन्ड हिज नंबर, so please contact him anytime, any day, anyway, because at this moment professionals आपस में, जो चार्टर्ड अकाउंटेंट में सबसे अच्छी बात है, we never hesitate to take the help from each other, and we are always ready to provide the help to each other. So that's a culture for all of us, and I can only say that this will be the quickest way for connecting the speakers with the पार्टिसिपेंट्स जिनकी क्वेरी है, क्योंकि स्पीकर को बड़ा अच्छा लगता है कोई इसको क्वेरी बाद में भी 3 जने फोन करके पूछें, जो मेरे को पता है कि बड़ा अच्छा लगता है कि वो पूछते हैं सर इसके अंदर क्या था, थोड़ा मुझे समझ नहीं आया, तो इट मींस ही वाज लिसनिंग फॉर द लास्ट 2 आवर्स फ्रॉम द स्पीकर। सो अपने आप में ये एक प्रेज मोमेंट होती है फॉर द स्पीकर। एंड कांता जी का भी मैं धन्यवाद करूंगा मैम, आज आपने इस पूरे सेशन को बांधा और हमारी तरफ से आप पूरे टाइम लगी रही, तो इसके लिए आपका भी बहुत बहुत धन्यवाद, और मेरे सारे मेंबर का कि आप सबने संडे का दिन NIRC को दिया और जुड़े रहे। और आई कैन सी देयर आर मेनी पार्टिसिपेंट्स फ्रॉम चेन्नई एंड साउथ इंडिया एंड वेस्टर्न इंडिया साइड, सो I really like to thanks to the people from other regions as well, and I can only say that this is my one of the second last session of my tenure. My tenure is ending on 28th Feb, and this was the best session for me as well. And thank you so much for joining this day. Thank you so much.
Thank you. Thank you. Thank you.
Thank you, sir. Jai Shri Krishna. Thank you.
Thank you. गौरव जी एंड कर दीजिए सेशन को.